The Breakfast Club. We're getting started a little early this morning. I hope you had an awesome week this week so far. Yesterday was a great morning to start the day, and looks like we've had a great start this morning. Caught this nice little run down. So again, as we've been showing on our setups, we're looking for these relative equal lows below us here, and potentially these relative equal lows below us a little further. The setup that initiated that this morning was this run above this little high. And then as soon as it busted through here and returned back into that order block, catch it short. And you're paying yourself at each one of these on the way down. The lows below you. And now we're aiming for these lows below us here. I'm just going to let that one run. On a 15-second chart, I'm in a caught it. I just took this trade out of here, and then I got back in on a 15-second chart here. And my stop loss is in profit, so if it takes me out, it doesn't matter. All right, so let's look at we're looking for these equal lows below us here, and then once these lows are taken, there's a big pool of liquidity down below us here on the hourly chart, and we look like we got a little setup changing up here on the 15 seconds. This is good. Looks like we got a run higher now. That looks like a little run that just took out those lows. We get back to the mean threshold of this candle here. And right now that's kind of holding price. So I'd like to see if this starts to turn here now. It came back and took my stop. So we want to check these two candles out here. And we're looking all the way down to this little imbalance here and this little fair value up here. Let's see if this gives us a rollover. We've got a trade above. So I'm expecting this to start going. As soon as we get back into here, I'm expecting this to go higher. I'd like to see that little spot stay open. Just trade right to it and then leave. There we go. Now I'd like to see that continue going higher. Before we get into all this fun stuff here on the 15-second chart, so ideally you want to see market structure break, not just this candle. We want to see market structure break to the upside to confirm this is an actual little reversal for a short period of time. We might be just running back up into this range here. So this is a little 15-second reversal going on right now. With a slight break in market structure, I'd want to see these three candles get taken to the upside first. So we have that return to that level. And now I'm looking for it to go higher. And if it rolls over, because I've got one of two directions. This one can go lower, this one can go higher. So you're in a small consolidation. So sit on it, wait for these three candles here to get taken to the upside. Let's look for a Bitcoin now. Bitcoin. La la la. Remember the box I gave you yesterday? Look at that. That's the level I said it would come down to. Right inside. We're banging around inside there. I like that. The fact that we held short of the consequent encroachment of that. Now I'm looking to see if that will go higher. And welcome our new friends, Zach and Herman and Richard, to our group, to our Telegram channel. Welcome, gentlemen. It's good to have you. Our Telegram channel is all based on loving, caring people that only love, eat, and breathe ICT stuff. We love it. So we're looking for like-minded people to join the community. There's no drama here. We don't have any of these sidebars about flat Earth crap and, you know, Michael's private mentorship's got like a ton of different levels in there that you can go getting engaged in sidebar conversations. We only talk about ICT stuff. Entries, everybody's just talking about entries, that they're just happy to help each other participate, and no drama. If anybody's mean or there's drama, you're gone. You miss out on a great community, man. So again, so see how we're still going higher right off that level I called there. Wanted to see this stay open. You can't get more precise than that, my friends. And now you're looking for a continuation to the upside. Now I want to see these 3 candles get taken. I don't know why I have Montego Bay playing in my head this morning. Went out and visited a friend last night, Gary. My buddy Gary, he's big into investing as well, using this stuff to buy and sell the banks. Smart guy. He's making some good coin doing this doesn't just have to be index trading in a 15-second chart, you know. You can be using this stuff to trade anything, any asset class that's got candles and is on a major market or traded in a major market. You can use these ICT principles. So sorry, let's get back here. I get sidebarred here. I got nothing for you for Bitcoin yet. We're still in this consolidation. You're in a discount portion of the consolidation. Look at this wick here. That's it. You wouldn't want to see that get any lower than here. If you start taking this candle out on the downside, look for it to support you to continue going lower. Otherwise, I'd want to see a market structure break. I want to see it get above this large consolidation you've been in here on a 15-minute chart. Use that as leverage to go higher and start digging up into this higher 68.95 area. So sit on this and wait for a good breakout. Right now, if you get lower than this on a close, these 2 candles, then there's a potential. There's a short there. And if you get above these 2 candles, use them for support to go higher. ES. Montego Bay. So I want to see us get above this order block here. Otherwise, short. Yeah, I've got 2 of them overlapping, so wait for this. Wait for this. Love my dots. 816. It's a magic thing, man. It's a magic thing. Yeah, it's long for right now until you get above here. Then it's better confirmation of going longer. You've taken out some lows here. This has all been made. This is all jagged. This was relative equal lows. It's been made jagged, so you're looking for a long there. Let's look at some of these other little stocks on the side. Gas. We're still waiting for gas to get the lows taken. We're seeing how we act inside this level right here. See how we're just banging around inside the box I gave you a couple of weeks ago? I don't know why I have the power grid on here. I never trade power grid. Crude oil, we'll talk about that in a second. S&P. Man, Mom and Dad, I know you're not listening to my show, but I'm happy for you. You're doing really well up there, almost breaking 25,000. Happy for you guys. Natural gas, we took out that little box I was expecting, and now we're looking for lower prices again. And again, we're looking for a dig down below this low here. And eventually this dig into this box here. So we'll see how we act off this box here in UNG and see if that goes higher. It's a nice good discount price right now for gas. Gold. I think we called gold lower yesterday. I'll have to double check. I don't want to say that we called something we didn't. AGNC, them things coming back again. Goliath. This Goliath's just hanging in here, man. This is a penny stock I bought a long time ago. And it's slowly creeping up there. It's almost double from the low. So far it's obeying. We do not want to see it get below this level, 116. If you lose 116, we're going lower. And who do we got here? Mr. Soybeans. Look at that box. Love it. Hit the box. We're out of there. So we're looking for nothing. I'm waiting for it to react off of here now and start driving through this for these relative equal lows below us. So we need to continue to act off this daily fair value gap and start pushing and using this as support to go lower, this box. We're still heading in for our wheat objective, looking for these lows. And now that we've taken out sugar's lows, I like that. That was nicely done yesterday. That was what we were aiming for. We got that. Now we're looking for a, let me get this thing out of the way here. Let's see if we can't get through the consequent encroachment of this and start working this whole upper side of this fair value gap here and start pushing through. We get through a break in structure here, then I'd like to see that whole price continue pushing higher back into our little price action here. And that's not the box I would use. That's where we're headed. If we get through this candle here. Eau de Café, we're looking for this low. We've come back up, hit the mean threshold of this level. I like that. We're looking for lower prices on coffee. Cattle still in the barn. We hit our box beautifully here yesterday or last week. We're having a nice reaction off of that. We're looking for these lows to get taken, and it looks like we got confirmation today that we're heading that way. So looking for cocoa to take out these lows. Look for this bar here first, and then we'll work the lows. Lumbers and slumber, and the piggies are on the way. So I like to see little piggies. That's nice right there. That's really nice. That's almost like an institutional order flow entry drill. We just got that fair value gap. It just came back and just tapped the top of it. Just got into the top of the fair value gap here, and we're starting to push higher. So I'd like to see that dig through these two candles. If we just hit them like we've hit them once, twice, 3 times, I want to see it dig through the mean threshold of that candle, and then see if we can't go higher. If we don't get through this candle here, if we do get through that candle, then we're looking for a deeper run back into the consequent encroachment of the gap. We broke that low yesterday, came back to it, extended the range. Back to this order block. Anything specific? It doesn't know if that's anything specific that reached for. Then we get a reversal here on the highs. Body takes out this high. Come back and just tap that open. Beautiful. Run through this box I had outlined for you. And we almost come back and tap it. We closed above it. Gives you the indication you're going to run back up into this fair value gap. It does. Fills that. Now I want to see it work through here. We've already closed above it. So now I want to see this right here provide some, what are we on here? Hourly. The fact that we came up to it, through it, and now we're starting to work the upper half of it. See how it's working this consequent encroachment here? It ran all the way through the fair value gap, and now it's coming back and hanging right on that consequent encroachment. That's a good sign for further bullishness. I'd like to see these highs get taken now. With it, like, get some legs, get out of here now, and then use these two candles, or these three candles here as support to go higher. I just saw a reversal. Crap. Too busy talking over here. Let me get up. Let me just, okay, we're on oil. We've reversed right now, so we're going short again. So if you've taken this long, you've cleaned up these highs, pay yourself at these highs, and we're reversing. So look for lower prices now. I just saw that. And I just moved my stop loss up and just was like, crap, I could have got out a lot sooner than that. But anyway, we're going lower back. We're going lower. So if we in oil, here's where we're sitting in oil. Oh, sing me loud, Montego Bay. Okay. It's fun to have an ADHD brain sometimes. Your brain just goes off singing a song, and that loop will be in there for days, I'm sure. Nice box that we hit, that we put down there a couple of days ago. Hit it. Lovely. Got a nice reaction out of that. We're finding some support off of there. Love it. Love it. Looking for higher. Looking for support here. Looking for oil to keep coming higher now. We could get a retracement back into these highs here. I want to see this fair value gap stay open. I like the fact that we've had this small little wicks in here and we're getting some resistance. If it does kind of drift into this, again, you want to see the lower half of this fair value gap stay open. And just tip in that and just start running. That was the market structure break I was looking for yesterday when I was talking to you guys. The more significant one is these three, but that one there on the hourly is ideally what you want to see it break. And it did. Came back into a reasonable level and then extended the range. Took quite a few hours to get out of there, but that's why I like these three here for now. If you hold those, if that holds price, look for that to keep going higher. Again, if it doesn't, I wouldn't want to see it even come back and tap these old highs. I'd like to see it just come back into that level right there. That would be good, and just start working from there on the way up. That's a 1 hour chart. Greg's probably like gonna miss this and say, I missed it. Yeah, so far this idea is holding here. It's actually stuck between lower and higher. So on a 1 minute chart, I'd like to see yeah, you're inside this large range here right now. Just working the large range. We've worked the upper range liquidity, the lower range liquidity. Now I want to see this hold. This right here, I want to see that hold and start going higher. Mind you, this is the large range down to here now. So that would be the downside objective. It's hit it. Nice snap off of that. I'd like to see that start climbing up out of here now. But we got to get above these three candles. If we can get above this candle's mean threshold, then you're looking for this idea to settle in and continue going higher. So right now, slightly bullish on that, maintaining bullishness in oil. And Swissy, we called Swissy from here to here, yes, in the last couple of weeks, like to the mark. We're still looking for this to climb higher, looking for this next level, and we're just hanging inside that fair value gap right now. So if you're into Forex pairs, Swissy is sitting right in the middle of it. So right now we want to see, I like the fact that we did not break this candle's low, like another extension higher. I like to see these little propulsion candles forming and then keying off the mean threshold of those, pushing higher, using them for leverage. Come back, find support off of the opening. Lovely. Come back, find support off the opening, push higher. And now you want to see this really start getting above this candle's high here and using that opening again as higher pressure to get higher. See the candles getting smaller inside this fair value gap. I like the fact that we are working, if you look at this carefully, we're working, the bodies are working the upper portion of that fair value gap. You see that right there? Now, I wouldn't want to see the consequent encroachment or the lower half of this fair value gap get worked anymore. If we do 75% of that, so if you're looking at running back inside this gap here, looking at no more than 75% or 50% of this wick, or take this larger wick and use 50% of that, which is probably somewhere in here. This is as far down as I'd like to see that go today, and then start pushing higher. And I got a couple more for you. Told you it was going lower. All right, so now we're looking for Wayfair. Remember when I called Wayfair down? Look at that. Ka-slam. Whoever was in Wayfair, I told you it was going lower. There you go. So if you're pulling, if you did work Wayfair, you sold covered calls on Wayfair, you're making a killing. All those people thought this was a bull flag. Retail, if you sold covered calls in demo, of course, in Wayfair, selling covered calls on a bull flag for retail, and you trade contrary to what retail thinks, and with the setup, the technicals I gave you the other day, you made lots of demo dollars there. And your stop loss will be sitting right there at 48.92. If you run to 62% retracement of that range, take some money off there and aim for this right here. And then I'm going to put a little box down here. I tell you, this stuff works in all asset classes, man. This is my area of interest for Wayfair. If it my little box, Montego Bay, Disney. We're slightly bullish on Disney yesterday. We need Disney to get above here to keep pushing higher. Still bullish. Nothing's given us an indication to go lower yet, so I do like these the runs higher. They look good. Run out this low. Disney's pulling back into this range, so from here to here, 50% or more. Get in at a discount. Start using this range here for your fib tool on the way up. Oh, I just see another reversal in 15-second chart there. All right, so let's get back to here. Let's say good morning to some friends, and it's 1/4 after. So inside range, the box I should have drew for you folks is right here. That's the box I would have drawn for you. You work the bottom half of it, work through the top of it. We've taken out these candles. If you're pulling your fib tool on the way down from that reversal, if you would have pulled your fib tool on the way down like I showed you, had that as your downside objective, move to the sidelines, you just traded internal range liquidity. That's my internal range liquidity model. And now, because we haven't you haven't had an opportunity to get in here, we'll see if this consolidation breaks through. Come back and find some support. This is the upside box I would give you. If I was going to give you an upside box, I'd give you this one. Oops. I don't know why it keeps jumping around like that. That's the upside box. So if we bounce off of that and then start running back down, I'm looking for a run back into this liquidity here, back into the mean threshold of this. So consequent encroachment would be a nice place for this to kick off of here and start working the inside of this range here now. Okay, let's say hello to everybody. Good morning, good morning. "19 people in this morning. Welcome, welcome, good morning. Who we got in here? Nobody's chatting yet. There's the consequent encroachment. Now, if we blast through this, hit that high, bodies hold up on the consequent encroachment, and we get this drop down below this low here. Hadi, good morning, Hadi. Dibbo, it was a beautiful setup. Yes, it's a magnificent little run. Call both sides of this on the way down, the way back up, and the reverse. This one here didn't really give you much of a reversal, but oh, the little tiny one. So now we are working the top half of it. Good. If we start getting into the top of this and use this as support, look at this box as support to go higher. And then you've got buy side liquidity sitting up here. Buy side liquidity is sitting right here. Watch the bodies. Good morning, Abs. Campione, good morning. Zach, welcome, my friend. Mark. Hadi. Very nice, long on the 15 seconds. Good morning, Shepard, Russell, Craig. Bia and Fiddlesticks. Good morning, everybody. All right, now I want to see that continue to the upside and start taking out these relative equal highs now. Rejection block. If you and you'd have been a really steely-eyed missile man to catch that little tiny I think the opportunity was right there off that candle right there, but you'd have to be pretty steely-eyed to catch that. So you'd usually want to wait for a break-in structure, and we did not get a return to a break-in structure. So you look for the next highest, and you're already way outside the 50% of a discount range, so you let it sit and wait. Don't rush this. It's Tuesday morning, man. You just made a huge chunk of change on the way down there. And Michael, I know Michael caught this because he told Phil where to go this morning. I saw on the channel, on the private channel, he posted his little dancing, what is that guy? Deadpool? His dancing Deadpool guy. He caught this definitely on a short this morning. I caught the retracement to the short, and he probably caught it way up here. He ran it all the way down to those lows and then put on the dancing Deadpool. Tertius. Have I met you before, Tertius? Drayton, welcome, welcome. Mr. Pips. Love Mr. Pips. All right, so we've got to run up. Did you pay yourself at the rejection block? How many times have I told you guys pay yourself at rejection blocks? If you did, you don't always get the buy side of what you're looking for. Even that, you didn't get that. If you move the buy side to that high there, you still didn't get it. This is being worked now, so I'm expecting to see that candle take it on the downside and then start running back into this range. So I initially wanted to just see this candle hit like that and then start creating this effect. The fact that we ran back up, it took that high out, makes me go, oh, we'd like to see that go higher now. It doesn't. It continues to work this little box, which is that little bull flag type of thing. So it goes above, below, above. As soon as it does that, you get, if you wanted this to go higher, let's say, right? And you put your stop loss down here and it came back and took you out. That's it. You wait for a break in market structure. Don't just keep saying, I'm going to go short. I'm going to go long. I'm going to short, just using this as your key off level. Otherwise, you're just going to get your ass handed to you right now because your stop would be sitting here. And you'd be like, no, I've lost twice now. Well, it's because you're staying inside a consolidation. You're going to get beat up. Wait for a break in structure and wait for a solid setup here. Mind you, this could be a nice, oh, what are we looking up here? We may see, do, 422. So I know, so you put traded below it, now you traded above it. So this, you look to see it give support to go lower. This, you look to see it to go higher. So you flip and flop back and forth on here. Welcome to consolidation. You're allowed to beat me up once, and then I wait for the setup. I wait for your setup. Are you in ICT's private chat? Hells yeah. I've been around since 2016, man. I was one of his original 800. And that little private one he set up is only for those who who finished his. We have an extension happening, folks. If we can get above here on a body, start pulling your tool. That doesn't sound good. Your fib tool. That definitely didn't sound so good. Pull your fib tool and start looking for some swing projections here. 2 and 4. I was calling 422. So that would be a 4 banger right up there. So let's see how well we get support above here and use this candle as leverage to go higher. Let's see if we can see what happens there. That's the buy side you're looking for. Again, you don't know, am I going to take this high? Am I going to take this low? Am I going to take this high? Am I going to take this low? So wait for a decent breakout and like a displacement candle, because we've got this consolidation here. So a CAM model 1 entry, CAM model 2. There is no CAM 3 in here. There's a CAM 1 or 2. There's the displacement candle. So you see that? Now you want to see that freeze up there and give you a nice big tall, not just run the liquidity like it just did. See, it just tapped above it. That's not a displacement candle, sorry. I want to see a big body candle close above that. It did run out the liquidity above. See how it just tapped it? Now, do we reverse here? Yeah, coming up for 7:22 in the morning. So sit and wait now. There we go. Higher and higher. Now give us a kiss, love. Come on back here and give us a kiss. The teaching yesterday was good. Thank you very much. DRU and ICS were on ICT's morning. Pepe. Lindsay. Hello. Craig, looks like we start to see retracements of large gaps between 9 a.m. and 9:25. Who else has a thought on that? Well, Michael talks about in his 2024 mentorship looking for each hour, looking for the most recent high or recent low, and look for these smooth areas to become jagged. So we've had these smooth areas go jagged, and now you're expecting to see a run back down into smooth areas getting jagged, right? So if this does run up into here, this is the next projection higher. Look for that 2, 2.5, and 4. If this reverses here now that we've taken out smooth area becomes jagged, smooth area becomes jagged. So we're looking for the liquidity to be ran out here, and then perhaps if we can get below here, breaking structure, we're looking for a run down back into this range here and making these attempt on these lows here at 850. That's your sell side here. Oh, yes. You ain't going to sucker us, my friend. You ain't suckering us. So we wanted that to go higher, but now we're going lower. Now we're going lower. I want to see it react off of there. And let's put a... this is the market structure break. I've got one. I like this order block here. And you'll stop. We'll have to go up here. Should have waited for a market structure break here. I got in a little overzealous, I think, but we may have caught it here. This is where you want to see it break, not here. I'm gonna wait. I gotta see this break here. I gotta follow some rules here. This is good. This is good. I have a smaller account. I'm trading. I kept that one on for a smaller account, so that one runs. That's good. So now we get in this trade below here. Nope. That just came back and took me. I just got short off of here. Took some stuff there, moved the stop loss to break even, and look at that. Just ripped right back and took my stop. Want to see market structure break. Got to follow the rule, man. Wait for a structure break. This could be, if we run above here now, this could go higher. So don't get caught in these fair value gaps. Keep yourself, protect yourself tight, man, because that's that was a Kobayashi Maru right there, boy. Here's your long right there, and here's your short, and I'm literally sitting in the long still. I went, I'm in the middle of this whole range here. I could get beat up in here. So as soon as it took that low, pay yourself a bit and then move to break even. Because if I'm wrong, then it snapped back and took out my break even. Because if it does end up going higher, as soon as it takes that out, then this here level becomes important. And there's a little warning sitting here right now. So this order block's important. So if this should push higher now inside this range. Craig, this is about the timing start of a pre-gap open. Yeah, we have the see that run back up. I tell you, you can get caught on the wrong side of it if you don't follow your rules. All right, that's going higher. Oh yeah, baby. Right there. I caught that long right there. Now, because this is on a tear and we're at the 930, I see, and it's at the 930 open, I was literally trailing my stop behind these candles here in case it did this very thing, kind of ripping back against me. So as soon as that caught that there and that one formed and that one closed, I moved it right up to here and it literally came back and ripped right through me. Yeah, it's 40 bucks. Okay, so I like to see this provide support now and keep coming lower. We're looking for these a run on the liquidity below the market here ideally now. There's a return back into that order block here for a short. Not that we're going to take shorts or anything like that. We're waiting for the 930 to 10 o'clock, half hour. Let it just form. Don't get caught on the wrong side of this. Just let it form. Did I miss crude oil? Yes, you did. I talked crude oil. I went through all the little assets this morning. That's the first thing I do in the first half hour is go through all the assets. Lean for a second option. Does buy side liquidity mean a buying opportunity or sell against the buy stops? Buy side liquidity. That just tells you that's the objective you would be aiming for, to go higher. If you're aiming for here, or you're down here and you're aiming and that high hadn't been taken, let's, so for example, right here, if you're looking for that, would be your objective to reach for. And if you caught this short here inside the larger range, you're looking for internal range liquidity, quick run for it. My little magic box here would have been in this level, as you guys know, would be from here to here, and that's where my little magic box on the downside would be. And boom, hit right there in the consequent encroachment, and now we're back up inside the box up top. So this is internal range liquidity we're looking for. Let me get rid of this here. And now you're looking for this compression. You see it start to compress. It has to bust out of this level. And here's your first, that's 15 seconds. Let me go for my 1 minute one here. The 1 minute one is just about to start forming, and that's our opening range first presentation. Should be sitting right here. Oil buy stops, or only buy stops, people that are short are set above old highs. Also, breakout traders put buy stops there. Good morning, Edgar. Tristan, good morning. Tristan, good morning, good morning. So looking for this to go higher now. Is that going to stay open? No, we don't have our initial presentation yet on our 1 minute chart, but our 15-second chart, we got one right here. It's messy. Stay out of it. Wait for it to set up. I like this, the fact that we've traded above it. We're back inside this order block here, these two candles. I like to see that go higher right now. Otherwise, it's messy right now. So you sit and wait. We're watching and waiting. Remember? Patience. Patience is what it's all about. If it takes off right now, just because I said it would go higher, does not invite you to run and jump into it. If we're just staying on the horse right now, staying in price action, and we just want to watch this participate, where we just want to stay inside, stay on the horse. Right now, I just ran out those highs. So always think to yourself, pay yourself at an old high. Pay yourself at an old high. And I like these, as soon as we have a propulsion candle, like you want to continue to propel price higher, I want to see that open, can get hit. And again, look, see how the highs are taken? They just keep getting taken. I want to see at best this open get hit and then accelerate through that. Driving up and down the mountains of Pennsylvania today on my way to a golf outing. Just me and my car listening to this Theta stuff. Well, good morning, Mr. Derek. I would love to be your DJ this morning. DJ on the way to the golf course today. How's that? All rhyming words. I like the fact that this wick here We're staying in the upper portion of that wick. Let's keep working this upside here. I want to see this candle's mean threshold, this wick right here, get eaten through on 50% or more, and then you're looking for a higher run up. I love this continuous work back on these candles. If you look at them, drive back down, drive back down. This is lovely. This becomes important. I like that to go higher. Curry Fishball, how are you doing this morning, young lady? So when we look at this thing, so see how we've already made these higher areas more jagged on our, let's look at this here. See how we've got this lower level that has not been smoothed out yet? We've had all this become jagged. We've run through it. We've come back into consolidation, CAM Model 1. I'd like to see that hold off of there. 25% of that wick. Oh, this is upside right here. I didn't see this. We're going to see a purge. We could see the purge into something like this. This is the upside box. There we go. The purge. Internal range liquidity, my friends. And when that one's done, we're looking for this one. See, we're calling it from here. Doesn't matter. We're not, again, you're not taking it. If you are taking it, you're gambling. There was nothing, no clean setup there. Yes, we're staying on the horse. Yes, we're still hitting our objective, but you want something cleaner. There's plenty of clean entries for you. You don't want to be you might take another little run on that stab on some liquidity up there, but I don't think so. I don't think so. 460. I like this. I like the stab off of that level, the box. Nice little stab off the box. There's your 1 minute initial presentation. Oh, I always like to see that close below here now. Derek's on the way to a golf outing. Could be a rough day, hey? We're up here covered in snow. It snowed yesterday. Ugh, it's supposed to go up to like 13 degrees here today, though, so we should get a nice little balmy weather. We should be able to get our boats out and go swimming again. They're thinking, 13 degrees? Are you crazy? So this is what I want to see right here. This initial fair value gap open. Well done, Tristan. Thank you, thank you. And you want to see it close below here. We've taken out old highs. All these highs that have been taken. That high has not been taken. So we haven't really broken any huge market structure. We have broken it here, yes. But notice how we're not getting a trade below that on a close. Not a trade, but a candle close below that. You're doing good. Had some small profit in London. Good for you. Good for you. We caught this massive run down this morning here, Curry. Caught that right off that little swing. That was a nice little run down. And then we've caught a couple of runs in here and then left it. We're watching to see how this acts inside this little candle here now. We have not got below here, so looking for higher prices now. The fact that it's eating through our box there, I like to see that box being used as support now. This is a mess. Sell-side liquidity building, though. It is certainly building up for sure. There's lots down there. So 460 is my upside look. That usually puts us in here somewhere. That is not US temperature, Craig. No, it's not a US temperature. You guys are in Fahrenheit. So what is that Fahrenheit for you guys? Right now we're below 30 degrees. So I think we're -7 or something like that. So I don't know what that is for you guys. It's like -20 something. Or no, 20 degrees or something like that. 27 degrees. 27 degrees in Cape Town. Yeah, well, you're pretty much the same temperature as us then. That's 27 degrees Fahrenheit or Celsius? It's hard to switch back. In Canada, we use metric when we're buying gas. We use metric when we're going distance. But we use a metric when we're talking about temperature. But we use standard when we're talking about weight. We use pounds and ounces. And we always say, how much do you weigh? I weigh 250. So it's not 250 kilos, it's 250 pounds. In England, we call them stone. I weigh 14 stone, I do. Because back in England, back in the day, they'd measure you by the size of a stone. They'd weigh you, and they'd say, how many stones are you? And an average stone, or the stone they'd weigh you by, was 14 pounds per stone. So if you ever hear a Brit say they're 13 stone, 14 stone, it's 14 times 14, and you'll know what that is in pounds. So that's what a stone is. So here you see how we've come back to the box, found some support. Now if we push higher, look for 1460, I said. We're pretty close, 1458. Yeah, 1458. Sorry, I should have said 1458, not 1460. And I'll tell you why. I'm looking for this order block right here amongst all this mess. That candle right there, it's close, is what I was looking for upside. And it's working through it. So now this candle becomes important to me, and it's mean threshold now at 1457, 58, same thing, same place, I guess. So we'll see what this candle closes and see if we get, now that this high has been taken, do we get a reversal? And we're 15 minutes more into the close, so we let the morning unfold and we go. This is kind of exciting. Internal range liquidity on an hourly chart. The magic box I will draw for you folks is upside magic box. I don't know why I call it magic box. You guys could give me a better idea to call it something different. It's not the magic box, though it is magic when it hits it. It's some damn sexy stuff. There's my upside magic box. Hoo-ha! The magic box. Perfect fall morning then. Yes. You're in Celsius, 27 degrees in Cape Town. You're in Africa? Lindsay? Or in a different Cape Town? It's supposed to be 80 degrees today here in PA. Oh, lucky you. Lucky you. Filling the org. 487, London high is the target. 487, this one right here, he's looking for these equal highs he got right above you here, and that is a fair value gap above you, and then the magic box. Okay, so already hit consequent encroachment. What do you base your magic box on? The fair value gap is what I base it on. South Africa, yes, Lindsay. I used to date a doctor from South Africa. Lovely lady. It's a previous fair value gap typically. 80 is golfing weather. It certainly is. I love to see that, not fully filling that, and just keep going higher. Oh, almost makes me wish I would have taken that call this morning I gave you for long. Okay, we're waiting. Discipline, folks, discipline. That's what we need. It's okay to look at it after the fact and go, yeah, I'm glad I called it. I'm glad I like to see that go longer. Off the order block I was looking for. That's good. Now I want to see our little magic box get hit. So you're looking at that fair value gap. My accidental buy on UNG at 1332 went green today. Happy about that. Oh, good. Your accidental buy on UNG. Let me see where you're at. See how we wanted gold to go higher? I love the fact it was working that. So if you were smart enough to see this, as we were calling that this morning, it's nice, that nice lift off. That's some big pay right there, just in that one candle on the hourly right now. That's nice. Bitcoin, still looking for Bitcoin to go lower. ES, we wanted ES to go higher. ES has gone higher. Oh, that's good. Oh, I'm thinking, why did that stop right there? There's nothing in here, but look, I'm going to blow this up and show you where I screwed this one up, where I put the box in the wrong spot. The box was right here. I put the box in this little area here. It's not that area, it's this area right here. That's the area, the imbalance. Look where we've come down to. We've hit it, and now we're getting a reaction off of it. So, Craig, you bought that at the mother of all places to buy it. That's a nice reaction off of that now. So I will humbly admit that I was wrong, that I was looking for these lows. I'm not looking for these lows anymore. I'm looking for a run back up into here until proven otherwise. Craig, you've got yourself a tiger by the tail, my friends. He has got himself a nice little run there. So if he starts to come back down into here again, you don't want to see it come back down here. So this little fair value gap, or this a common gap you see here, you want to see that, find some support at that and continue pushing higher inside this range here now. And you've literally caught yourself 20-30% return on your money in that. Not that, and it's all demo money, of course. It's all Craig's using to buy this stuff with is just demo dollars. Hit this objective, looking for higher. That's still working. This is still coming down. I like to see that. That's come up to our level here. that we're calling for. And now I want to see that. We wanted to see it bust through here. If not, this is good return to, if we come back to the open on that, 2182, go higher, leave that little portion open. If we roll through this and close below that level, look for a run back into this wick. Our coffee objective is still down here. So far it's driving the direction we want. The little cows are on a rustling. They're kind of getting antsy inside the barn here, getting ready to bust out. I like the fact we've run all the liquidity out here that wanted to go long on that. We've run them out. And we're back inside that fair value gap daily. I like that. If we can get on top of this one more time, or this consolidation, you'd see a big displacement candle. Use this as a cam model one to watch cattle go higher. Given that you're only got that as your upside objective initially, you want to see a big displacement come back, tap it, and get the hell out of Dodge. We're still looking for cocoa to make a run on the lows, which is good. So far, everything is working out, and we're looking for this to run back up in here higher. We're nailing it this morning. We're nailing it. Looking good. We've run these highs out right now, so objective hit. Do we use this candle as support? And where do we close on this hour? Holy crap, while I'm yakking away, I can see reversals going on in the 15-second chart here. Oil, nice little reaction off that level. Inside the order block. Old high, nice kick off of that, kept going higher. That's what we wanted to see it do. Inside that range, internal range liquidity, oof, oh, right to the money, and then bounced off that through here. Look for support here off this candle here. Get a body above that and look for some support inside this fair value gap right here. Draw it out, look for support off that, Craig, and see if that goes higher. You don't want to see it get below this candle here, so my stop would be sitting below here. You want to see that stay open. Yeah, see it's climbing above it already. I like that. Oh, this is looking sexy. Looking at. Looking sexy. Let's see a nice little run up there into our next objective. Wayfair coming down. Disney holding still, looking for it to keep climbing. Get up there, Disney. I got a short and a long going on in the same place. And we still got 5 more minutes to go. I can see that Monday close is still above us. Are you driving and assessing the charts while you drive, Derek? Where are you at? Let me send the highway patrol. I hope you're not out there doing this with the charts. Oh, I think that's him using his thumb, dodging deer. I hope he's got himself a caddy driver who's driving for him and he's doing some assessment on the side. I can see the Monday close is still above us. Did we hit the consequent encroachment yet above the opening gap? I can't tell while I'm in the car. You can't tell while he's in the car. Tristan, I asked my friend from Ontario why Canadian football fields still use yards. He said it's because the Americans on their team don't know what a meter is. Oh, they dumbed it down for us. That's hilarious. That's a good one. That's a good one, Tristan. They dumbed it down for us. That's true. Most of the Canadian football is made up of Americans anyway. It's like hockey. It's mostly made up of Canadians anyway. Oh, that's funny. Good one, Derek. Or Tristan. Mark, I took shorts at 476. 476. Why'd you take 476? Are you taking it off the mean thresh or the 50% of the wick? Is that what you're taking it off of? 476. What did you take that off of there, Mark? If we come low, 62% of the full range. Oh, you're looking for, maybe you did this. Let's have a look. I'm trying to think of this, how Mark got the conclusion to take his 62%. Nice. So you can come back into this mean threshold of this candle. I like it. 62%. Took out this old high here on the last so many hours ago. And he's got a beautiful reaction off that. So if you're taking 62%, option trade entry reversal, and he's looking for these lows, I like your theory, my friend. I like your theory. And where's your stop loss? Just sitting above the high here? Or are you pulled right into a break even right now? Because if that makes another just run up, it's running for these highs and getting back into this level above you. And you can do what you like, but I like it. I'd be careful right now because it's still looking long. I could come right back up there and take you out. And right now it's bullish, as I see it. For that to go bearish again, you got to get below this low here. You're literally between bearishness and bullishness. Two different directions. And they're overlapping one another. And you're sitting right square in the middle of it right now. So I could argue both sides of that, higher or lower. And if they're seeking internal range liquidity on a larger range, that's the next upside objective. So be careful there, Mark. Stop losses in profit. Oh, I like the way you're talking, man. I like the color of your fabric. $10. I marked them up this morning and took a few trades earlier before I left my golf outing. Ah, nice. Nothing like being green on the green. That's right. Derek will not be in the rough today. He'd be on clean grass today. So yeah, we could see this as another quite a large leg up. We're definitely more bullish now than we are bearish. And we're not going bearish again until we get below here. Just like the first fair value gap, 6 o'clock was works, and people can't see these levels. Michael teaches it someday. Did you get some profits below this low? You got to be, every time there's a swing low, look at taking some profits. So again, I like to see it. We got to get below 446 on a close. Thank you. I took 3 contracts, took 2 off on the first reaction, and 40 points. I expect sell side to be run at some point this week until we get over that first fair value gap way above 580. I'm bearish until then. Yeah, if we close below 446. We have our bull flag. Retail. If we don't get this, if we don't reach that spot, I'm okay with that. I like Mark's 62%. Nice range call there, Mark. So if you're looking for that 62% and you're looking for your reversal, you want to see this candle get taken on the downside. It did, but as soon as that gets taken again on the upside, then the downside, then the upside, then the downside, I'd be off. I'll be waiting on the sidelines for something clean to set up, because right now that's just consolidating in a little mess. So I wouldn't touch it right now. But that's just me. If that's you're confident that that's going to go lower, and I agree, there's lots of liquidity sitting below you there, so I just don't see a clean entry just yet. Not even on a 15-second chart, and that's pretty sloppy as well. So back to bullishness again. See how we're rolling back and forth off this fair value gap. Back and forth. Above it, below it, above it, below it, above it. You just keep going, find support. And any one of these could be a run down or a run up. So which one do you trust? Wait for a displacement like this. I want to see a big displacement candle get above here and use this consolidation as a cam 1 model to go higher into my box above this here. I wouldn't take it now if you're not already in at the high. I do putt better when I have some green in my pockets. Yeah, oh, bang, there's the box. All right. How are we going to act inside the magic box, my friends? Run through it. The way that's acting. I like the way that's acting. All right, so we've got the next magic box. We'll go to... Oops. We'll see how we act. Wicks can do the damage. Don't forget, see where the bodies end up. I like the fact that the body is stopping just below that consequent encroachment. Wicks run through it. I'm all right with that. Let's see how the next few candles work out. We could have a silver bullet entry here for a short. This could be a CAM 3 model setting up now. You guys see the CAM 3? We got so many models we can play with now. Derek, it's on my bucket list. You and I are going to play golf one day. I haven't played golf since my, like, three surgeries ago. So I probably won't have the kind of bomb I used to have. Maybe it straightened out that wicked curve I got. I got slices. I can slice and dice a ball, man. I spend all my time in the bush looking for a bag of balls. I've got so many extra balls in my bag just because I go hunting in the woods. I hit the ball and say, see you later. Put on my bushwhacking gear and into the woods I go. Yeah, we're going higher. Look for these relative equal highs above you now. So that's the buy side liquidity above us. So we put this little guy up here. There's the first objective, and then the second objective is right above you here. So don't forget, mean threshold of this candle is 529, 528, somewhere around there. So the top of this fair value gap. Initial presentation on Thursday. Still inside the box. Bodies are still respecting this. This would be nice to see the snap right through. Big drive down here now. Cam 3. That'll be a nice, it'll be a big Cam 3, which means we could get a retrace back up into here somewhere before going even lower. No, I like this upside liquidity still. Oh, that could be it right there. What's a 15-second chart look like? Oh shit, yeah, there is a reversal already. Yeah, that's low, going lower. I want a premium so I can get a discount. Let that come up a little higher. I may not get it. Shit, it's going lower already. The discount came up 1, 2, 3, like 1.5 minutes ago. Hadi probably saw it, didn't you, Hadi? Did you catch this on the 15-second? We might get one more chance. Come on. Come on back. Right here, if we get a next candle open up and then come back into here, leave that portion open and start driving down. There's your optimum trend, institutional order flow entry drill for reversal. Look at this. Silver bullet for a short if we come back in there. You need a big red dot around. You need a big red dot around your cursor, Darren. It's really hard for those of us that are driving to follow your cursor and avoid oncoming trucks at the same time without. I don't even know how to get. Michael used to have that, like a cursor that would sit here. So if you guys know how to do that, is it up in here? It's a dot. Do I want a dot? No. I do like crosshairs. Is that dot any more helpful? You don't get the institutional order flow entry drill just yet. But if it pops back up into here, this could be your silver bullet for a short. Common time range, the reversals happen on pre-market gaps for prior day. I have been watching since ICT told me about them, and my guess is 9 a.m. to 9:25 to start looking. What about that grouse in the bush? Took out the Asian high session, reversed macro times 10 minutes before and after the hour. 10 a.m. Thanks. What is SB? Silver bullet. Should be one right now to short side perhaps. Right there. Now I want to see that stay open now. Didn't want to see it fill. 15-second chart still has a return to the order block. We could see 25.10. It's 25.12. See what kind of reaction we get in here. It's already above that level, so I think we're going to go higher. Yep. Pay for new information. Now I gotta wait for a market structure break on a 15-second chart. If we break this high here on a close, we're higher. Got to get down below this box again now. Find some support at the box and start pushing through this order block. That's way too big a run through that. And we've left relative equal highs above us. So if you went short, you can unload your position. Wait for a breakout below that low. Ideally, now we want to see a break in structure down here. But internal range of liquidity, you'd be hunting for back to this consolidation again. But right now, this is an opportunity to unload your position because this could go higher. I want to see it get below this candle. look below that close. It's got to get down in here. I think it's going to pop up here. It's not going to leave this untouched. Now we're going to wait. Wait for 20, what are we at, 1821. So if it takes that high out there, then I'm looking for this low to get taken out. Yeah, we're just hanging around inside this one to go higher, this one to go lower. This one hasn't broken a high, so this one isn't as valid as this one is. No, they're neither one of them really are. This one didn't take out a low, this one didn't take out a high. You're sitting in the middle of them. Hence we're in a consolidation, so wait for a cleaner setup. So for here, this one here, if you use that as your the silver bullet to go short, and it ran through, and your stop loss would have been just above that mean threshold, because you wouldn't have seen that mean. You didn't want to see the mean threshold get taken. It did, and then it went all the way up into the rejection block, and then we're back inside the range again. This small little range. Retail's bull flag failure when you take out that low. Or bull flag support if it takes out this high. Don't give back all your profits you made this morning, people. Just wait for a clean setup. So far, the bodies are still inside the box. Still finding support inside that little magic box up there. See how the wicks did all the damage? Wait for this to get taken here. And away we go. I'd like to see that. No wicks. I just want to see this start running now. Come all the way back up into here. I don't want to see that. We've already worked this. So I want to see this candle that'll be it. That'll be nice right there. Get a body below here, man. Not a wick. Still got these relative equal highs above you. It still pierce through that. Want to see a wick get through here. Right back in that new week opening gap. We've got more upside if we start busting through this on a close. So I want to see how we act inside this candle. And now that we've dropped below this open here, or this close, I want to see a body get down in here though, not just a quick wick run. Take out this liquidity, then run for that. There was a nice little reversal on the 1 minute chart there, Craig, in oil. If you've been following along with the lessons, you would have caught that one nicely. Oil gave you a nice little 1 minute reversal right here. See, you have this here, reverse, trade through into the order block and go short. Right there, off that order block. And 70.64 to 70.72 is your downside objective on that. So far, we're still finding support as a downside run. We still come back up inside that fair value gap, inside the box. I'd like to see this box just finally give way and just start ripping through here. Take out this low. Not a clean setup, folks, so wait for your ideal setup. Oh, we're looking to go higher. Looking for these highs here now. Consolidation. Again, wait for a breakout one way or another. Know when to sit on your hands and wait. Should see one right now. Short, thanks. You need to separate that. Apply styling. Runs your cursor. Use separate app. Okay, to increase its size. New system settings. Thanks, Tristan. I would love to do that someday, Big D. D, are you talking? PA wanna close the day opening gap. It seems. Don't hit my stop loss. Oh my God, may go down. You can't pivot either direction on that right now. You can go higher or lower. So you got relative equal highs above you, and you got more relative equal highs on a higher time frame premise above you as well. The next upside box will be there to there. I like the fact that this consequent encroachment of this Thursday's regular or first presentation, we've been working the bottom half of it. If we do run up into here, see a stab into that box and then go lower. That's a 15-minute magic box in a 15-minute upside objective. If we run through that, we're definitely going to push the highs. Yeah, you don't want to short this just yet. You got to be careful. I tried shorting off of his, and I thought you got to wait for a body to get there. As soon as it hit that, I took a short there, and it came back and took my stop. So now I'm going to wait. It's got to take that low. I did not follow the rule. I just looked at that one. That looks pretty close. Saw this coming down. I was like, yeah, that looks good. But body did not break that low. That's the rule. Well, for me anyway. Fair value gap, trade back up through it. Now you're long again. And then it trades through it. Now you're short again. There's nothing in this side. So you're banging around on a confirmation. Everybody's looking to get short here. It's going to run them out, scare people into thinking that it's still going higher. And then we'll wait for a setup. This little this initial presentation, or this consolidation. We've gone from consolidation, run, cam model 1, back up to consolidation. So you got consolidation to consolidation with a small little piece in here, come back, tap it, and you're back up to a higher level. So you want to see this level here, like steps. See how this becomes a step higher. So if anything, this has got more bullishness in it overall than bearishness. And all the time we're sitting inside that fair value gap, above or below it, just lingering without taking out a low. You got to do the overall biases higher. We've already come back to this order block on a 15-minute chart, so we should start pushing higher. You can't deny bullishness in here right now. And for our highway travelers, you are in the perfect position right now, my friend, just to go and enjoy your golfing day. It is not the place you want to be participating in right now. Oh, Craig's like, I only go long in crude. So you must be buying. You don't have a short or an account like this where you can short oil and long oil. You can buy or sell it. Or you just stubbornly say, no, I only buy in an upward direction. Because there's some great opportunities to short that as well. But if you can only buy it, that's cool. You broke above this, took this, return, went higher, took out old highs, back into order block. Did not take that order block on a close. Quick return back down into the range again. So a 5-minute chart, you've returned back to the consolidation here. Now, if this was a really funky Cam 3 model going on here, doesn't look like that, but if we ran below these candles here on a trade and then traded back up into 50% of that range, of that leg there, you wouldn't want to see a body get above that, and then you want to slam that sucker all the way back down into here. If oil does not have any intentions of going higher, right now it does. We're just keying off this candle's high here, or it's open. I like that. Consolidation, return to a Cam Model 1 to go higher now. So you look for confirmation on the lower time frames, which is right here. On the 1 minute, we have a reversal. There's your confirmation candle. Break in market structure, ideally, you'd like to see a break in structure to the upside, which would be this swing point here. Take that candle out, find support at it. Then you want to start running for these equal highs up here again. Get through this candle. More confirmation that you're going higher is through here, and take that candle out to go higher. So I'd like to see support here. Not a swing point yet in terms of a swing reversal, just a change in direction. It's a reversal here, but not a swing reversal. We haven't broken structure somewhere yet. So you want to take that old high out like there, and then you've got a little bit of a market structure break. Ideally here, because that's more of a significant run. Instead of, there is a swing here, but I'd like to see a bigger one up here for confirmation. Otherwise, pull your fib tool from high to low, and if you've keyed off of that level, you're looking for 50%, buy it at a discount and run up to using your fib tool in this range here. And if you blow past that range, then you can start to reload back on again to go for these equal highs above you. Looking weak, so watch out for potential downside. Hey, I'm going to have to get going. I'm almost here at the golf event. It was great listening to you on the way today. Good luck, event, everybody. Good luck, Derek. Have a good time, buddy. Never short crude. Don't want to. Stubborn. At 66, remember, I love speed. Have a good short. Good today, though, from the long crude and that gas. Long crude and natural gas. Good. So far, I can't deny this is a it's a long setup right now. I've hit the box in a 5-minute chart. We've come up to the premium level. We've keyed off this level. We've keyed off this level, inside that range. You're finding support inside this consolidation right now with a 5-minute chart. So we have relative equal highs above us. And we have FOMC speaker at, we don't have FOMC speaker. What are we talking about here? That makes sense. We have 315. That's euro. Okay, we're looking good again on the downside. We're below here. Let's see if we can't get a body below that level now. Okay, set. Just wait for your setup. Unless you've already hit your setup, then enjoy. We've got a body below that here. Definitely got a body below it now. Run. They're not going to leave that untouched. Look for a run back up into there for 11 o'clock. I think 11 will take that out, and then we'll start running back through here. We got to get through here now. Wow, that's the first 938. See, get below here first. We did take out this candle on the downside right there. Pop back into it for a short back into this order block. Now I want to see this order block whole price. If not, this liquidity, don't forget this liquidity up here still. We have not really broken any significant market structure here yet. We've come all the way back to the mean threshold of this CAM2 model here. And this could be a CAM3 if we run through here, come back, find support, and still push higher for this liquidity above us. So right now I am slightly bullish. We can get above 471 on a close. I'm slightly bullish right now. Do not take that low. Small range. CAM1 model, or sorry, CAM2 model here. So you want to see this get taken to the upside through the mean threshold of this. I'm looking for those relative equal highs above us. This one, it's got to get above 474 on a close. Sorry, 475 on a close. Definitely bullish now. looking for this liquidity above the market here. Told you they're not done screwing with that. They give the option for the reversal was down here on a 15-second chart. I was looking right here on a 15-second chart for the reversal. That's why I gave you the levels right here at 471. I want to see it close above that. It did, came back, found support, go higher. Then you wanted the larger 1 minute candle at 475. It went above it. It did come back, found support, go higher. That's the bullishness. Now I'm just recouping my losses I took in here. And if we get that back to the, I want to see this create one of those little breakaway gaps now. Once we took above this high here, come back, just give it a little institutional order flow entry drill. And not even come back and touch that. Just start really driving it higher now that we've run out all the people that wanted to go bullish still. Because this was the big bull flag everybody wanted to participate in. Now all the people that want to go short here, we're going to run them out. So quickly run down, take out the guys that want to go bullish, pair them up with the sell side, and then see if we can get through this magic box above us here. And look for the buy side liquidity at 548. 548. And now you've taken out a high, so look at the reversal on the 15-second chart. Watch for the potential reversal in here. See, we want to see that stay open. It did. It didn't even come back and give you an institutional order flow entry drill. It just did. There's a little imbalance sitting right here. Look at it. You'll see it right there. Came back, give that a little kiss, and we're going higher. How do you like your market structure so far? Now you want to see a run on this equal highs in that box. Inside here, there's a yep, would have to be there. You have to see a couple of down close candles, and then I want to see an extension above that. And where are we going? $5.26. Yeah, we're right back up into that box. So your reversal again in oil, Craig. I was looking for 7 something, 7. $70.72, your reversal again. So you're aware of these reversals. You've got all these lows taken. So you look for your opportunity to see your reversal. Here it is right here. Breaking market structure here. Or that candle you want to see, and then that candle, because we have a nice little swing point right here. So there's your reversal. Body trades above it right here. Boof. Gives you the, hey, guess what direction I'm heading in. That's the candle. Runs back, gives you an opportunity to get in on that candle for your long. Take out that high, find support at that. Now you want to see this candle hold support. This is the box, magic box up top you'd be aiming for inside that internal range of liquidity. The fact that you're trading right at that magic box. Now if we see a reversal below this low, you're looking to get back into this range again now, and this downside box would be around 71 to 70.95 as an internal range. So if we take that low out there, break market structure to the downside, look for that box down here at 71 bucks. And that's trading internal range, but you're not shorting. So if you're looking to long that again, you want to see that candle hold support now. Look at Bitcoin. Bitcoin is reversing. Looks like it's running out these old highs here. It's run up to the premium box, the discount box. It's right here. I'll draw the boxes out and you see how they act inside of them. And your premium box is up here. Watch how they act inside those boxes. You just got to get out of here to extend the range. And we call the S going up. It's been really sloppy, but it's still running for those highs. UNG. It's got to start getting up. It's got to use this now for support. You don't want to see that just come up here and then finally drop down and take these lows out. Oh, yeah, if we kick off of this. Watch this order block right here on the daily. We got to get through this one. What is that keying off of? Get above there. It's got to get above this imbalance here. If we can get back above that, find some support at that, you're looking for higher. If we just hit the top of this, roll over and come back down again, not a good sign. And we get back through that common gap, not a good sign. Soybeans, wheat, still coming in our direction, sitting, still coming in our direction, sitting, still looking to go higher. That's good. Closed above, come back, give it a kiss. Didn't even touch it on the way back down. So we can find some support in this candle. We could come all the way back down into here. This could turn around and wick right into here. I don't want to see the consequent encroachment of this wick here give way. That would be ideal, just to see it come back down to here, touch this old high, stay on the open or the close of this candle, mean threshold of that wick for a down close, and keep pushing higher. There's no sign of a reversal there on the 1 hour. That oil's come all the way up into the box. It's reversed, traded below here, coming back up inside this. You want to see this candle hold price and go lower. And it's got to take out these 2 candles down on the downside to go. Overall break in structure. Otherwise, you're still inside this range. This one here and this one here. So now it's just hit that level. You've got to ride through this to get on top of that, and then look for that fair value gap to give way to start running back up for these relative equal highs above you. And if that is the case, you may have a yeah, you got to get above here and here to go higher. Otherwise, this could be just reversing, coming back for these equal lows below you here. And Swissy still sitting inside the box. Wayfarers come down into that range. So if you're paying yourself on the way down with Wayfair, first swing. We talked about this morning. 50%, 62%. Move your stop loss now. Now move your stop loss to 62%. Pay yourself at 70. You have an option entry reversal. If this ends up reversing on you, you've caught all of this on the way down from that entrance. So you caught it on the run down. If you're selling it short, peel off some profits down in here. It doesn't mean we're going to reach for this box, but pay yourself on the way down. Always use your fib tool in this big range, especially in stocks. I haven't researched a lot of stocks on buying and selling them, but that's what you'd be doing in here. If that holds now, if that comes back and hits just 62%, move to the sidelines and wait. You might be able to pick up a better deal down here for a buy for running for these equal highs. On that, Disney still sitting higher. I like that. Looking for all that liquidity above the market here now. We broke structure, come back, found support at it, looking for higher prices now. So if you're looking to get short on this, you got to get You got to break this downside consolidation. 11 o'clock. On a 15-second chart here, back into some chop. You want to see this provide support here now and start climbing higher. If this candle gives way, then we got another short opportunity. And we're getting into 11 o'clock. So could very well take out that low. And we did. So now that's a market structure break to the downside. Use this level here to go lower. So we're looking inside this range here now. You take out that low and then take this high, then you're back into a run higher again. Right now it's bearish. The 9:30 to 10:30 a.m. range. 9:30 to 10. I do like 9:30 to 10. And usually at the 11 o'clock, there's a reversal back into the range. 50 to 62% of the range between 11 and 9:30 is open. So if that's the rundown into 10:30, I expect to see a retracement in here after 11, which is what we're seeing right now. We're 62. Let's see if we get anything down in here. And look for sell side liquidity here. %, right there. Drag down to the box. Be it right there. This candle's open. It's hit. This would be nice to see this react now, come all the way back through here and take out these lows today. That was the run on the last hours, a run back into that range, back into that big box, and I'll start hammering down. Or not. We're not done up there. If you weren't paying yourself on the way down and you just waited, you would got ripped back and taken you out. If you weren't using that fib tool on the way down with the retracement at 11 o'clock I told you about, from 50 to 62%, there's 62%. Didn't quite get down to 70, so your stop loss should have been sitting at 50. Already paid yourself at 62%. It came back, took you out, and you wouldn't be worrying about that. This big whip back here, you'd be like, well, whatever. You made profits. Now it's taking out that high. It takes out this high. Look for lower. It comes back, finds some support inside these candles. Right there. It goes higher. Then you got consolidation, CAM 2 model to push higher. Got to get through here now though, because you got one going short, one going high. So the short needs to be taken out below here. The high needs to be supported here. So watch that candle there for continuation on the sell side. Bodies froze right on the bottom of that. See that? And this low was not taken out with a body. Wicks. You wouldn't want to see it retrace that far back down, especially with a wick. That's definitely going lower. Support in here. See this candle's wick? 50% of the wick drops straight across. Oops, right here. This one here. This one here. Balance. There's no clean price action in here. If you're just trying to chase price or trying to make a trade for the sake of getting in on a trade somewhere, this is just super sloppy. On a 15-second chart, you want something really clean. It's not giving you anything clean right now. Look for this little box. Do like 432 to 410. Once we get through here, Got some more sell side stuff. I'm interested in this box once we get below it. Taking out a low, reverse, looking for continuation to the upside now. Got to get all the way back down into here. There's the dig in. Got to get above here now. I'm slightly bullish right now. If we get below this level here, it's bearish again. This is a lot of mess. Not clean price action here at all. Wait for the afternoon now. Wait for something clean this afternoon. This needs to go higher. Close below here. Mean threshold. You on lower. Looks like it's going lower. The box. There you go. Now 11:30. It's 11:27. This should be the starting point of a turn. I expect to see it get above here now. Wait for something clean. Greg, if you bought oil and natural gas this morning, your oil's doing well, as you may already know. You found support off those levels. See the level we were talking about, found support. The level you're talking about, found support. Get above here, come back, give it a tap. Look at this order block here, run up, come back, find support, pushing higher. Looking for these equal highs, or that high. You got it. You're still going higher now, so just let her ride. This is nice. Just let her buck. Now for where have we got on here? Disney's not doing anything. That's sitting flat. That's sitting flat. That's going higher. That's coming back into, we wanted it to come back into here. So we'll see. I'll put the line on where I want to see that come back to. Looking for the lows in cocoa. Looking for that fella down there, sitting flat, still coming in. So far, all the ones we've been calling are just looking delish. What do we call for sugar? We wanted to see if it came back to this. Found support off of here and start pushing higher. You didn't want to see it get through here. You want to see an optimum trade entry reversal here and just keep going higher. It can come back to, it did already, so it's already hit that open. You want to see this low part of the fair value gap in sugar stay open, and just this turn into another wick and start working back up again. This is still coming down. Good. That's all good. UNG's sitting, doing nothing right now. Sit inside that level. Yes. Bouncing around. We're looking for, see the upside level? See how sensitive that area was in that box? Came right up inside it, smashed it. Now we're right back inside this box. Consequent encroachment. See, that's internal range liquidity, my friends. Trading internal range liquidity. Magic. It's freaking magic. If you know what you're looking for, it's magic. And that's in Bitcoin in a consolidation. And we did the set 27 was the turn. I tell you, my times are important. Found support off of here, come back. Perfect entry here for long. Looking for a run back up into taking out previous runs high. 1130. Well, this one right here at 420, 492. Looking for that high there. And this is just off of Michael's 2024. 2024 model. This is another one of the models he teaches. And if you line this up with my time and price, my little dots, you'll see that it's works pretty bang on. It's 15-second chart. It's better with the 1 minute chart. Okay, so I'm looking for a run up here now. We've got relative equal highs. I don't think they're going to leave those untouched. That's up at 512. In the 15 seconds, I'm long off of this here. I got long off that order block there. And I'm break even now, so I don't want to see it come back against me, so I want to see that keep going higher. So it's a zero stress trade now. And again, you're looking for any potential to take out an old high and then look for a reversal to happen and a break in market structure to the downside. Look at this box here. Go to the bathroom. I'll be right back. Hey, where are we at here? I've heard a little on 90-minute cycles, but that's all. I trade 30-minute and 90-minute time cycles. Didn't Michael say that those 90-minute time cycles were all bullshit? Didn't he call that like a load of crap? Have you guys found a nice something logical that repeats itself all the time in those 90-minute cycles? I'm not trying to shoot your model down. I'm just saying, I remember Michael just said recently he called that whole 90-minute cycle thing. He called it out and said it wasn't true. Support off of here, looking to go higher. Take out that high. Takes up that low on a close. Then we've got a swing point. And it does. Back into this range. This old high here. 62%. I bet that's like 62%. So you're 62%. Back to this old high. Now you're between this reverse and that reverse. So you're in the middle of the range. We're in a discount range now. You get through this candle here on the downside. We've broken structure again to the downside, and you're looking for continuation. So right now we're just stuck between this one and this one inside a consolidation. Wait and see where we go from here. I like to see that kick out of here now and start pushing all the way through these two candles. This one here and that upper little basket right there. If we don't, and we push through this little one down here, then we're looking to extend the range. So these are like the internal, the little boxes. I'm not going to keep calling them. I've got to come up with a better name than magic box. Little tiny boxes like this. Oops. That one. And that one. You got to extend through those. Otherwise, you're just seeking internal range stuff. You want to get chopped up in a meat grinder, dance around in the buzzsaw. Again, not super clean action. If you're trying to stay on the horse, just looking at practicing, because that's what you want to do right now, is just practice. Stay out of this market, man. It is super choppy. It is not clean. There's the downside box. Snap off of that, see how it hits it, and now we either drive through it and keep going, or you snap it up and come back up into the premium level of that range. It looks like it's gonna drop below it. It's right on that entry. So the fact that we've wicked through it a couple of times gives me an indication that we might start pushing for these lows again now. And then you've got this little fair value gap right here. That little imbalance was traded back to already. See where the bodies sit inside that thing. Mean threshold. Imbalance. Definitely nothing looking good, Russell. I'm waiting for oil trade. Bullshit. I like 30 and 60-minute charts. Funny PA. I need to lose my desire to trade after 11:30. Well, when you start getting into lunch hour, this is the marking time stuff, right? This is the chop that you're subjected to in lunch hour. Now, there's usually a measure, like Michael says, at 11:30 and 1 o'clock, there's usually a measure of retracement back into a range. So let's take a 5-minute chart here. Look at that chop. Look at all the wicks on a 5-minute chart. Do you want to be stuck in that mess? You don't want to be stuck in that mess. Yeah, there's still liquidity above the market here. This is all jagged down here now. So one might think, yeah, that's a great place to aim for after lunch. We got relative equal highs above us here, relative equal highs above us there. We're in the discount of this big consolidated head here on a 5-minute. But hey, this could just simply roll over, eat through 50% of this wick, start heading for lows. We got relative equal lows below us. So I'd want to see today's fair value gap get traded through, come back, used as a short to go lower. That's the only way I'd like to get involved in that. Yeah, you're willing to let, 50 handles or so, or even 100 handles go away, just to get confirmation that we've broken structure to the downside. Come back up, use this level, use these order blocks and this fair value gap to go lower, to start aiming for down here. And there's another 100 and somewhat handles below you here still. So Watching DJT plus 7% literally every day, but not buying. It is painful. So a 15-second chart, there's a short right here, but again, it's not something you should be participating in really. We've broken structure to the downside. This breaker here is being used for support. I'd like to see that roll over, come down. It comes all the way back through that, blows through it. Then you're looking at this side to go up higher. You got liquidity above the market here. See, if it was clean, it would just come back, hit this, and react off of it cleanly, and not just back around in here, right? It's taking these highs out here now, through here. Short's gone. It's right up to the top of it. That's the maximum I'd like to see that go. That would have to come down from here. That's literally that reversal here, come back, find support inside that to go lower, inside the breaker. If it even revisits that, we're already above this one here already, see that? And that order block there. I could argue both of these now. This one's starting to look better to go long now, off of here. Yeah. Getting beat up in there if you're playing around in that. That's the upside box right there. Trade through that, going high again. It's just taking out a high now. You want to see that level provide support, that little box we looked at here. See how we traded below that little box, and then we extended the range. Then there's a little imbalance here in this order block. As soon as you trade above it, you come back, find support at it. Look for, actually you didn't, you just found support inside that little box right there. Found support, ran up through this box here. Make sure I got that right level. 488.5. 488.5. You went up through it, drove out the high. Now we're back through it, find support, internal range again. And welcome to getting beat up in lunch hour. You want to find support at that, and you just did trade below it, came back inside it. They looking into internal range liquidity again. Fib tool. Watch that whole internal range here. Waiting for you to see what happens to the new day opening gap. Yeah, the new day opening gap high is here. Haven't seen today's yet. Where is today's? Journal range, there's 50%. Look for this little fella right here. Okay, come all the way down into this fair value gap here. Busy right here. See what kind of reaction we get off this level. What's the algo having for lunch, D? Not carrots. I ain't feeding this damn thing carrots this morning. It's being fed with dollar bills, my friend. Dollar bills. It's hungry for coinage and bills this morning. Yeah, this is just, that's a 15-second chart. Tell me how choppy that is. You can't see that there's some nice reversals here, but you know, who wants to be in a 15-second chart in amongst all that razor wire? If you're not catching a smooth run up or a smooth run down this morning, you're going to get chopped. There's a lot of chop going on in there. So we've caught clean entries this morning, but I tell you, there's a lot of, you got to watch these small little ranges that you're in, because you can get beat up in them pretty bad. That's why you watch. You don't participate in this. You just sit on the sidelines and study price action. And these kind of times, you just sit on the sidelines. Your 5-minute chart looks like razor wire. Your hour chart, nice clean point right there, that open of that candle. I like that. And I'd like to see this continuously work its way lower now and start getting back down into this level. We're through this order block here. We want to close below market structure here. Taking that low. So see how this range here, we went up, extended the range, came back through it, used it as a what does Mike call it? A reclaimed bullish fair value gap. Is that bullish? Yeah. So it's been reclaimed, and then we've gone shorter. So I want to see it eat through this level here now. See how that, we're right back to the next box below us. So we went through, we came through it, came back, hit it, drove down a short into the discount, literally tapped it, gapped inside it, literally tapped the close, and then extended the range. Now we're back down to the next one. Reaper fair value gap. I don't know the Reaper fair value gap very well. If that's a Reaper fair value gap, then great. I'd have to study that one. I'm going to seek it below here now. Yeah, I'm not sure about that Reaper one, Herman. That wasn't one I studied. He mentioned it quick one day, and I don't remember focusing a lot on it. So we've got below that level. I like that. Find support inside this, that little gap there. See that roll over and come back down. Otherwise, climbs back up on top of this. Then you're looking for another run back inside this small little range. And then if we get up on top of that, then we're going higher again. Back up inside that small range. Tap it. Could go higher now inside this range here. I want to see that roll over and start eating through here on the downside again. Like that. That's good. Give it a kiss. Come lower. Right there. There we go. Now I want to see that continue coming lower. Take me on a date, my friend. Take me on a date. Take me out for coffee. Board inside here. Keep coming lower. You can see this consolidation, price action, staying inside this. There you go. I like to see that poke through here. And then where's our next down? Always keeping in mind this downside 440 and then getting back into this weekly fair value gap. Right now we're hitting event horizon. So I'd like to see that keep pushing lower. What is that transparent box? Oh, that's the magic box from a different level. That's the downside objectives you keep laying out inside the higher time frame premise. Like the next box, this next box, if you're looking at my little boxes here, my next box will be somewhere well, we'll call it this. For now, we'll call it this downside initial fair value gap that we had today. That's my next downside level. And then I'd like to see this yeah, the next downside box is that's the lowest time frame box. Mm. 436. 436 is the next next one. I did 431. 412 and 422. Those are all the different levels. It is nasty for sure. Good night, Gary Fish. Have a nice sleep. reverse support. You're between here and here now. If you close above here, you're going higher. Absolutely, it's better to just tape read it. You shouldn't be participating in this. We've been talking about this for a while. Just because I'm giving you levels doesn't mean to say you should be trading these. It is super sloppy price action right now. And you're in lunch hour. So you shouldn't be messing with this anyway. Leave it alone. I agree with you, Mr. Khan. Market is ranging between sell side liquidity and buy side liquidity, so it's better to just tape read it. No high probability setups until we take out one side of liquidity. Oh, that's a lot of caps yelling you got there, but you make a good point. Extending beyond now, we've come, all we've done is we've had this little range here to here, reverse, come all the way back up to this, come back, found support at this. So you're stuck inside this consolidation right now. You're stuck inside a consolidation. The only way you're going to bust out of this is if we take this high, find some support at that, and then you're running back up into this range above you. But anytime you take out a low, always look for these reversals and then support. So here's your reversal right here. Body breaks above it. You come back, find support at it. Look for support off of here to confirm. And you get a body break above here. You give it one little kiss right here, run for the high. And this is the consolidation you're in. And the premium side, the premium little magic box, if you will. You take out the high, and now you want to return back into this. So you see a reverse here, and you think, but you also see a confirmation on a long there. So which one do you take? Again, small, tight little consolidation. You don't take either one of them because you can argue both sides. Right now, you've taken out that high, and you've come back to an area of support. If you lose that candle on the downside, you want to see this close below here to keep coming lower. If it doesn't, it finds support at that candle again, you come back, and if you get through this, that becomes your level of support. You close through it, you come back inside it for support, extend the range. Same kind of thing again. You come back, find support at this fair value gap now, and continue pushing higher. Now you've got this little tiny imbalance right here. If you trade below that candle, you're back inside this range. And you're back inside this guy, this small little range here right now. This fair value gap and that one are overlapping. So now you've got this small little tight squeezy consolidation. So you sit and wait. You don't want to be mecking around in this stuff, not in lunch hour. So wait for a breakout to one side or another, and then for a decent reversal. This is just, how do you practice studying price action? Even in these little tiny things. This is where people say, oh, that's all bullshit. I don't believe that. You can call these reversal. That's what consolidations are, man. Small little tight ranges. You look for these levels that either extend or, again, we traded below it. Like I said, we traded back into it and we come back into the range. Now we're looking for this one to extend below here. If it doesn't, then you're back inside this tight little range here. That level right there off that candle. Boom. See how it just rips right through it? Where we come back to? Right here. Inside the little discount box. And you'll see me put these little boxes up. There's the discount box. Smash down to it inside that range. Now you're back up over 50% of that range. So now you're back into the premium range again. And there's your consolidation. You just keep smashing back and forth, but study price and say, did that just smash down to any specific level? Draw your box out and you'll see. The box is there to there. Smashes into the box. Now, you want to extend the range, you got to get through these boxes. You either go above that one and extend the range, or you go below that one and extend the range. Get below this candle on a close, and I'm more bearish for this. If not, we are right inside here. And you watch this box to see how we act inside this box. And if you're looking at that range again, remember that candle we talked about? Look where we're sitting. Look where the bodies are sitting right now. Mean threshold of that candle. And above. I like it for right now. Right now that candle's holding support. I want to see that continue to hold support, start pushing back up here. That starts getting eaten through that mean threshold, which is right in here, which is 50% of this wick. Look at that wick right now. Divide that wick into quarters. We're going to study like right on what I understand is wick theory right now. 50% puts us right on the top of the box. So we want to be at the top of the box and higher. If we start eating through the top of the box, back into the box, we'll see where the bodies end up. Whether this is used for support, and then you turn it back to internal range liquidity. If you like what we're doing, hit the like button. It just lets me know you appreciate what we're doing here. And if you're learning anything, that's great. Ooh, that sounds exciting. Oh, Derek's posting pictures. On my way to a golf outing. Oh, that looks nice. Nice bluebird day for him. Nice. So we work through it. And we're still working lower. Trades through it, back to it, extends the range. Looking for a continuation on the downside again. Watch the first, this next one. There's that one. No, that one's done. Let's see if we can get through the next one. My next objective will be 40, 30, or 430. There's 430. Let's see what kind of reaction we get off that. Had 50 people today. This is good. I don't usually have this many people in here. It's nice to see you all. This could be a simple little reversal back into that range. That 430 is a and it's not just yet. Now it is. Going higher. Now, if you're pulling that, if you do take that as the reversal back inside that fair value gap or run back up into this range, you have to pull your fib tool on the range and then trade. Well, you don't have to, you do what the hell you like, but if that's your entry, right inside that box, that's your entry, 50%, pay yourself, move to break even, 62%, move to 50, and now you're sitting pretty. So even inside that little range there, if this reverses right on this optimum trade entry reversal here and comes back through you, you still got to make money on a reverse, even if you're going in the wrong direction. And right now you would have been taken out. So just on that small little reversal, you would have made a small chunk of change. Just using the fib tool technique I've taught you. If it trades back through here, which it did, literally opened right on it, you expect that to come lower now. optimum trade entry reversal. You caught that. And if you waited and said, well, if we take out this low here, we can trade back into it, we get short. You can't. So you look for this one. It traded, literally closed on it, opened on it, and it went, continue going lower. That's staying on price action, my friends. That's recognizing every direction when it's turning and when it's not. So it's taking out another little low there. Oh no, it hasn't taken out a low. So it's just returning back into here. We can get back up into that little area there. Great. Look at the range here. Fair value gap, just tapped it. Small little swing spot here. If it closes below that, it does. If it closes above it, small little bunch of little candles that go back and forth. It's above it, you're back into this range. Look at that. Actually closes on it. Little consolidation back and forth inside that thing. Small little range. That one literally closed above it. Go back into that range. Look for that little fair value gap above you. Right there. Now you want to see it break through here. This is 62% at least of this little range here. If I pulled my fib tool on that, you'd see. How do you guys stay inside your price action? See, there's 62%, 70% optimum trade entry reversal. You want to see it get through here now on the downside. If not, you want to see it get through here on the upside. Small little boxes. These boxes you see me drawing are the same things you put inside this little tiny range right here. Not that you would trade this. You just kind of keep your eye on those levels and see how well they get tested. If they get taken, then you're looking for an extension, looking for that high to get taken. And it's no different than what we do on a larger time frame stuff. If you know your price action study, you'll know that those levels provide support, and you're back and forth. And you may just bounce off of these for a while, getting smaller and smaller and smaller and compressing until you blow out of here. It runs out of little liquidity pools, little beauty arrays inside premium and discount portions inside the ranges. And when they run out, you'll see it go poof, take off out of one direction, extend the range. So here's our little level. We've extended past it, looking for the range to extend. That's just closed above. So if it comes back, find support off this order block here now, which is pretty much what it just did. You're looking for it to extend. Does this stuff make sense to you guys? It's like it. Just give me a thumbs up if you agree. Let me just see what we got here. 33 people. There's 60 people in here. I gave you this even in this direction here, just based on turning points in here. And that's a 15-second chart. No BS. If we're inside the market, if we're inside price action properly, you'd know we're in the right spot. We're trading it. We're staying in price action. Not that you're actually trading this, but we're just staying in price action right now. So thanks, Herman. Appreciate it. Now, you want to see it get above this cluster of candles here. And then do we find support at that? It makes sense, but for some reason I have a tougher time trying to apply it to higher time frames like 15-minute charts. Okay, well, let's take a 15-minute chart and apply it. Let's take a 15-minute chart and apply it, my friends. So, because this is fractal. I'm not showing you anything that is not fractal on all time frames. So let's look for this in this little swing above these highs. We'll start over here. See that little imbalance right there? You trade below it right here. You see that? You close below that level. So that's the level you're looking for right there. Trades below it. You come back in, perfect entry for short inside this range. You're looking for a fill. There's your first objective, or this may be your objectives. You may be just going, I just want to reach for this previous high, or the high of the fair value gap, the consequent encroachment of the fair value gap. You might want to divide it into quarters. I don't care, whatever your method is that you want to use to trade that fair value gap. If you're confident that 50% of this wick, we've already traded through 50% of that wick. There is a little imbalance in there, by the way, but we'll use this one here. You go short. That could be your objective. You're done. Now you're saying to yourself, if you take out this candle on the downside and we trade back into it, we're going to go short. Or you may go, you know what? I don't like those two. I like these three. If I trade through these three, that's a break in market structure for me that is more significant, and I can expect to run back down deeper into this range, and I'd be looking for this box over here as my downside box. So I would be drawing my little box here like this. You could probably extend it all the way up to this one. That would be my downside box that I'd be aiming for a quick liquidity. And if I clear that one out, then I'm looking for these equal lows below me. You don't always gun for those. Internal range liquidity is what like Michael calls it, low-hanging fruit. So there's your entry for a perfect entry, your run. Wait for this to get taken. It takes it right there. Okay. That now becomes the breaker. That's not brilliant. Well, I guess it would be a breaker. We take out this little swing high here. We don't take out that one. Some people might call it a mitigation block. You might argue that, depending on whether or not you agree whether this is a swing point that's significant enough to take out. You may go, no, this one looks like this one took out that high, so that might be the breaker that you're looking for. This one is buried inside that one. They're the larger ones, so I take a larger one. That's my logic anyway. If you stuck with that, I don't care. That's fine too. We want to see a return into this fair value gap, or this breaker. You don't want to see its high get broken to the upside. So you wait till you trade below it with a body, which is right here. You trade back into it. Look at this. I'll draw it out for you. It's a 15-minute chart. You don't even need to buy all that higher or that 15-second stuff. You can just trade on we're going to call it, for lack of a better word, we're going to call it the breaker. Trades below it, trades into it again multiple times. Your stop will sit right above that. I usually like to put it above the breaker, because if I trade through the breaker, I know I'm on the wrong side of it. So you trade back into it and it closes. It also gives you another signal that you're going lower, because you got this high, this high, this high. All these highs are taken, and there's a new reversal like this right there. You trade below it. This thing here was like this one here that we're looking for. You extend the range down into our little box. We hit it perfectly, filled the box. Your objective is done. You've gone from internal range liquidity high to significant low, right on a banger trade from there to there, and you're out. You've traded internal range liquidity. Now you wait. It trades all the way back up into this, which is the same rinse and repeat as we just did here. Hits it, boom, takes out that low. You've got another trade from that breaker. So it's the breaker trade, right? You trade through it, back to the breaker, run lower, back to the breaker. This breaks all of that, back to an old breaker. And then if you look at the actual, take that breaker and you split it up like Michael likes to talk about, taking these ranges. And we go to here, and then we go like this. We go quarters, 75%, right on the beezer. Top part's not filled. That's what you want to see. You want to see it wick up take this, you don't want to, ideally you want to see it stay in the lower part of that breaker and continue going lower. But up to the 75%, it did not take out the high. It was just short. It's like going through a fair value gap. You want to see it just hang above or below the 75% if you're coming low, or above the 75, just below 75% fill and it leaves. That's great. Same as here. If it just comes down to 75% of it and rips back up again, ideally above 50%. But if we close without, or go down without closing in the fair value gap, Michael talks about this many times. That's the classic example of inside the breaker, same kind of principle. Okay. And then you bust lower, take out this low, pay yourself here, pay yourself at the magic box that we created down here in the 15-minute chart. And then you come back up, you hit your magic box again, you trade through the other side of it. You go, oh, good. If that stays, we want to see this extend through the range. It hit the rejection block. So you always pay yourself at rejection blocks. Always, 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 because you may not get your lows and you may go, oh, good, we're heading for these lows. So let's say you did, and you see it start to trade back through it. You go, oops, it comes right back through and takes your stop out. But think, you just took out a low here, and here's your reversal. So if you're banking on this cleaning out these lows, you go, I do not want to see it now break this, not that high. I don't want to see it break that. And you see it start running through it. You go, I could be on the wrong side of this, even though it traded below it here. We did take out a low, and we do have a reversal. So when it trades through it on a close, this open here, we've traded above the high. You go, boop, come back, you give it a kiss. Now you're on the right side of it. You're aiming for this high and back up to this little fella right here. Sorry, you have to include that little bounce there. Look at that. Bink, hits it. And down you go. That's a 15-minute chart, man. I don't know how much more precise you want it, but now we're back to this. So if this is the reversal, now my magic box would go here. Now you know what I'm looking at on a 15-minute chart for a magic box. Internal range liquidity. You can't tell me this ain't precise, folks. It's freaking amazing. I don't know, Michael's not teaching this side, he's teaching this side. This is just something I've looked at and it works for me. You can use it. You can call it your own. I don't give a shit. If it makes me money and makes you money, demo money that is, then I'm happy for you. I don't care. You can call it your own. That's what I discovered. I use this side, not this side. Not that Michael's wrong. I just found something that works for me right now. And I'm sure it's something he's going to say is a part of his repertoire. And I don't give a shit. If it is, great. And then he can have it. He can call it his own. But that's my internal range liquidity run. I don't look on this side. I look on the opposite side. The side that initiates the reversal. The side that initiates the reversal. Not this stuff here. Not these little fair value gaps. I know he likes to focus on these ones. I do. But I look at right this guy here. It provides some serious, it's no different than what he's looking for here. He's looking for consequent encroachment of that fair value gap. He wants to see that stay open to go short. I look at the same side here and I look for that perfect entries to go short as well. So we're looking at relatively the same area. He looks at this side, I look at that side. Who cares? If it pays us and it works, I'm good with it. And believe me, I don't have anywhere near the kind of level of skill that he has. And I do not profess to have the level of skill that he has. But I just found something that I like, and that's just me. And I'd like to try and study price action on a 15-second chart, minute by minute, 15 minutes. If my theory is correct, it should work on every single time frame. That's the only way you know if your theory is correct, and it's fractal. If you say, oh, it works better on a 15-minute or a 5-minute, bullshit, then you haven't got a fractal model. You must have a fractal model that you can prove out on any time frame. then you know you're with the algorithm. That's my belief anyway, for what that's worth to you guys. And there's 52 of you in here, so 52 of you have my idea of what I think trading internal range liquidity is. If you like it, hit the thumbs up. If you think I'm full of shit, that's fine too. You trade your model. But that's 15 minutes for you there, JC. I hope that helps you, buddy. See how we take out the lows? Reversal right here is the reversal. It's a reversal, but it's not a swing reversal until we get above market structure. We look at break in market structure, either a little swing point like this, or here you pick where you want your break market structure to be. I like this order block that initiates this run, so I like to see that trade above it, come back inside it right here, so it trades above, inside it. So now you're back into this internal range liquidity hunt again, from that high to that low. You run all the way back up into the mean threshold of this candle. The bodies respect it, pops back up into, pay yourself at rejection blocks. Then it comes all the way back down into this order block again and starts running higher. So now I want to see that high get taken, that high get taken, and I want to see a run back up into a box up here. Does that make sense? I'm pretty sure you're talking about a Reaper fair value gap. Is that what it is, Herman? Sounds like a Reaper. I agree with you, D. What is the magic box? I just showed you the magic box. He mentioned it, but being quiet about it for some reason. Okay. Well, if that's a Reaper, call me the Reaper. So on a 1 hour chart, the 7 a.m. candle is a bullish breaker. So ideally, we would want to see some bullish reaction out of that area and a smaller time frame reversal form to be long. Let me answer your question. Yeah, see that right there? Downside objective. Remember I was calling this up here, off this guy here, off that candle there. And I said, oh, wouldn't it be great if we could run all the way back down into this level? Go through the recordings. You'll hear me talking about levels. I've been calling out this level, this old low, this low here. You hear me call that low, and then the consequent encroachment, and this. These are all the different levels I've been calling on the way down. Now you know what I'm looking for. So if we see this and we come all the way down into that level, this is the fun thing though. If you break this candle on a high, you do not want to see it close below here. Any return to this fair value gap, this is my belief anyway, if this is a reversal and you're going to go for an old high, you want to see this fair value gap get traded through before that candle's high gets taken out. You want to see it reverse back into it. Ideal entry is right there for a long. Stop loss would go just below the mean threshold of that candle, or the low, if that's the way you're inclined to be. You want to see a body get through here, come back, give it a kiss, drive through here. Now you want to see this one give way to the top side. Otherwise we're just inside. It's a liquidity run. It's not a swing reversal. It's just a change in direction. Change in direction. Swing reversals when we break structure to the high and use this candle for support to go higher. Now, it should only come to the high, the consequent encroachment, or that candle's close. Not the middle, not the bottom. I wouldn't want to see it come anywhere near there. And look what it's done. It went above it, opened, came all the way back, in through the 50%, in through the opening or the close, in through the, or hit stopped at that rejection or the midpoint, right there. Now I'd expect to see that just keep driving higher if I want to run for those highs. It doesn't. It literally opens, comes down one more time, hits this, and starts to finally fill this up here. So this is where you get that lag, and it's not a strong support on an hourly candle. To me, it's not really indicative of a really powerful run up higher or lower. All it is just saying I'm stuck between this array and this array. Inside the hourly range, I'm dicking around in the box that I would draw out on the hourly, which would be right here to here. That would be the box you'd be drawing out. And I'm in a 15-minute one down here. So if you're drawing this order block, we've traded above it, come back to it. See how I talk about the opening like I wanted to see here? This is what it did on the 15-minute chart. You see that? You trade above it, come back to it, and leave. That's what you want to see it. Leave. Get the hell out of Dodge. And what am I aiming for? Internal range of liquidity on the larger range. Hit it. Bing. First level right there. Then it reverses. And now it's coming all the way back down here again. Now you want to see that. And now I start looking at this saying, do we have a reversal above an old high here? There's an old high. I don't have a reversal here on a 15-minute chart. So you're drawn in this whole liquidity hunt again. So if you paid yourself there, start your trade all over again right there. Remember, you did this one, you went long right there, you pay yourself at that point there, it comes all the way back, start it again. Your trade hasn't changed. Your stop loss will still be down below this box here, because if it trades through the box, it's extending the range. So you start your trade out, you literally got money in your pocket to start your trade over a few hours later, all over again. And here you go. So it came back to that order block. So you say, again, if it hits this order block, I look for a reversal on a lower time frame. Here's your reversal on a lower time frame. It hits it. So you go, well, I want my confirmation. I want structure break. Here's your structure break inside the candle. And away you go. And we're heading back up for up here again. You want to see these two candles get taken to the upside and go higher. I hope that makes sense to you guys. It's been good hanging out with you. Have a good day, everyone. Stay safe. Thanks, Zach. Take care, buddy. $36 sums up. That's all we got today. 36 people liked it. Oh, we're only 8 people away from 1,000. We're about to break our 1,000. Who's going to be the 1,000th subscriber? 999 is my favorite number, so whoever's going to be 999. Give me your name if you're number 999. See how we trade all the way back up to new week opening gap. MK John, I'm 991. Oh, 911. That's my paramedic thing, right? And whoever's at 1189. If we ever get to 1189, I'll hold a special place for you in my heart. 1189, that's my paramedic number. So 911, 1189. So looking for all that liquidity we've been hunting for during lunch hour. Remember all that stuff up here? All this stuff, this box up here. Look at that one. 522, 527. Internal range liquidity. See that? Literally internal range liquidity hunt. Inside larger range. I'm gonna have to look up that because I keep thinking that's something I've invented. But if that's Michael's Reaper one, then I've got myself a cool name for my entrance. If it's called the Reaper Trail, I'll take my whole thought about. I thought I'd invented something new that Michael hadn't talked about. But if that's the Reaper, then I'll have to do a little research on that. I'll be like, damn! I thought I'd come up with something of my own idea. That if it's Michael's, hey, I will concede that it is Michael's. We're inside that new week opening gap again. And if you're one of those new day, new week opening gap traders, then new week opening gap, new week opening gap. Bodies are inside, ran all the way down, all the way back up. We just ran all the way down just to gather up liquidity off of this discount portion. We didn't get the 15-minute one, but fret not, my friends. Well, the 15-minute is an objective that we'll be aiming for shortly. Inside there, see that? That would be the, let me see that on all time frames. Visual. All time frames. Why is it not appearing on this time frame? Anyway, that's the box from there to there. So you see how we're inside the 1 hour box, the magic box on the 1 hour. We haven't hit the 15-minute. It's coming. She's a coming down there eventually. Do you use 5-minute and 1-minute fair value gaps on the back side of the reversal as magic target boxes if you don't have one on the 15-minute? Well, the only reason I use 15-minute is because Michael likes to call this one his bellwether. So I do like it, and I've got different indicators on different time frames because I understand that I don't want too much clutter on too many on one chart. So I use my magic numbers one and the ICT 930, Tristan's 930 ICT first presentation fair value gap on the 1 minute, and the 15-second, even though this gives me the 15-second one, when I put it on the 1 minute, it'll go on the 1 minute. Oops. And I like my 15-minute to give me my higher time frame. Oh, it's not on this one. Into this one right here. So this is one ICT's sessions, one setup, one for life. And you get all the Asian highs and lows. And that one, I put that on the weekly new week opening and new day opening gaps on that one because I can look back the 60-day look back on this. You can't do it on a 60-second or 15-second because there's not enough data that goes back that far on that. So on a 5-minute chart, I don't use a 5-minute chart. No, 15 minutes the bellwether chart for him. If it's good enough for him, it's good enough for me. I don't need to confuse anything. I don't do 4-hour stuff. And I got 1-hour chart I like to trade on. I look at the 1 day, get a bias for the day on the daily. On the hourly chart, I look to the bigger ranges on the hourly chart, and you trade that internal. I'm an internal range liquidity kind of girl. I like my I like to go on a date. I like to be taken on a date from high to low. I like to stay inside their internal range liquidity. I like to trade that, and I like to look for those order blocks that support price going inside the hourly range. And you can make tons of money off of just trading hourly ranges. Whether it's, and then you can use your 5-minute or 1 minute just to trade an hourly candle. As soon as a high gets taken, look for a reversal inside the hourly and just trade the hourly candle on a 1-minute chart. If you get a 5-minute chart confirmation that you've got a reversal in the hour, then trade that to the next. So instead of using the 15-minute, use a 5-minute chart and look for a reversal in that inside an hour candle. That way you're not waiting for a whole day candle to mess around with. So right now, you're back up to internal range liquidity again on the hourly. We could come all the way back up into here again and then start bouncing all the way back down to here. And then back up again and here. We could just work this whole internal range stuff inside this order block, inside that fair value gap, inside that fair value gap. That's the equilibrium important candle for me. That's the premium. That's the discount. That's all I look for inside that thing. And I go, where am I relative to each one of these different areas? And on the lower time frame, where do I find support at these levels? So if this level here now, this becomes a reversal, and we don't hit that high in the higher time frame, I don't care. I just keep, that isn't an objective. So until this candle gets taken on the downside, I'm not worried about it. I still think that's going higher. There's your fair value gap. You want to see that bust through that now and use these candles to go higher and use that as an inversion once you get on top of it. Want to be great? Use 618 is my motto. I'm in at 428. You're in at 428. You're in down here. You do like a turtle soup. If you're in at 428 and I would probably, if I went down to a 5-second chart, I could probably see where, so you said 428. There's the reversal right here. That's 430. I couldn't have even got in on your 428 on a 5-second chart. I would have had to have waited for this to get taken right there to go long. Comes back inside it to go long from there. So the best I could have got is 434. So my hat's off to you, sir. Congratulations. Well done. "15-minute order blocks sound like ICT price action model 12. Well, if that's a 15-minute order block price, does he use this? I should go through his His a 12 model. I've got all his models. I saw the first 3 or 4 of them. It's like, I got mine. I like what I like. Didn't need any more. If that's his 12, then once again, I haven't invented anything new. It's all him, which is fine. I'm happy with that. So watch here. We have reversal. This was not traded above. We did not get a body trade above. You see how it's solid? Does not trade above that. Now we get below this low here. You trade back up into that wick. Short. This low is taken. Trade back up inside it. You don't want to see this high get taken. You want to see that continue going lower now. If it gets through that candle and this candle swing point, then you're going higher. Is that candle's high there? 503.50, 503.75. Yeah, it's already above that. Take out a low, reverse, trades above it, trades into it, goes higher. Consolidation, that's why you get this trade below it. Look for one to go higher, or look for this to trade to it to continue on the downside. If you don't get the downside, look for the upside. When you've got them in a consolidation, they're going to overlap. So you've got this one going shorter, this one going longer. So it's a gamble where you think it's going to go. If you keep saying you're one of those people that want to see it come all the way back down here, then you're just trading desperation, hoping that that gives you what you want. Unless you get a significant displacement candle that says, I'm heading here. I'll give you one chance to get on, and whammo, down you go. So you traded above. Now, as we trade through this on the downside again, you look for this range to extend. There's that high's not taken there. So there's a change in direction here. We trade below it. You came back up inside it here. Extend the range. We've extended the range now. Are we going to trade back up inside this small little range? That's staying on price action. That's not running over here and going, oh, we're going for this thing here. You don't know that yet. You've got way too much in here. It's got to get through in order to confirm intention of getting that in that direction. So this fair value gap here is what you're trading back into. If you trade above it, you're back inside this or this larger range now. So you want to see that, just tap this and start working way down again. Old high is not broken. So this, what I was looking for here, is buried inside this structure here. That would be the break and all that. So there's your breaker. You did not trade all the way through it. You just got to run back up into here. Small range, trade below, come back inside, continue going shorter. You're heading here now. We're definitely heading here. No, take out this low. There's not a lot of significant lows for me, so you're just pulling back into this larger range now, looking at 50%. So there is a swing point here. So pull this fib tool from here to here. See where you sit. Yeah, you might want to pull it from the bottom there, Mark. I like to look for the most immediate one that makes sense. Maybe here. There's 50% right there off of this cluster of candles. There's a small swing here to that high. There's 50%. We can get on top of this candle now, start looking for these equal highs. I don't pull the whole range yet. Look for the little ranges first. If you pull the other range too quick and you ignore these little potential spots for reversals, then you deny yourself those little areas that Michael talked about running for, and you deny yourself a little bit of accuracy inside here. So watch this candle here, and then watch that little spot right there. Justin, target is 2459. No way, man. Not yet. We're still inside here. We've broken above here. Now, if we take out that candle again, you want to see this get closed below, and then that candle get taken out for a continuation on the downside. Otherwise, inside this little spot here, we can get a run back up into that little box we talked about right there. Hit it. Fair value gap. Support. Push higher. Extend this range double. We might see it come up to these ranges here if this is another price leg going higher. This is a consolidation you don't want to be messing around in. It's a 15-second chart and it's nothing clean. I'm off. Thanks for today. Already can't wait for tomorrow's session. All the best. Thanks, Herman. Thanks for your feedback today too, man. I really appreciate. If this is a Reaper thing, I do not want to take credit for anything Michael's got out there. So if this is the Reaper setup that I'm giving you guys, then kudos to Michael. I finally figured out your Reaper one. And if it's your Model 12, I fully concede everything I've learned is Michael's. So thank you for that, Herman. I appreciate that. So now we've got this break. So now I'm looking for your thing there, Justin. Your 659 or wherever it is you're looking at. What was Justin looking for? Justin 3438. You might have caught it there, man. Imbalance, right up inside the imbalance. This one stays open, fair value gap, right inside it, tap it, consequent encroachment, right here, going lower. That you'll probably find that that's not even consequent encroachment. Let me have a look at that candle. You got to take into consideration all of this, I think, right down into here. There's the consequent encroachment of all of this. Downside, downside, imbalance, downside to that wick. Right there. So it is body's just closed below it. Look at that. Right inside the mean threshold, consequent encroachment of that. I like it. Continuation. Back to this order block here. You don't want to see this give way now. You want to see that keep coming lower. So you're between this swing point to go higher and staying inside this candle here. This 2 minute or this 30-second candle. See how we traded above this already? We've come back, tapped it. You're inside this range now, and you're above 50%. So for me, you're going higher inside this small range. Imbalance. This is why I won't trade this area, because you are way into a premium range right now. There's 50% right there. That would, if it would have opened up here and traded back to that, maybe there's 50%. You get to 62%, 75% right there, which is that imbalance. Now you want to see this really roll over here and start coming back down through this. Go lower. If it doesn't, you're looking for this to get on top of that new week opening gap again in that small little area right there, and then start pushing higher to get back up into these little imbalances at all highs here. I think that might be it for me, folks. I've been here for 4 hours. I'll go through this one more time on all these levels we've been calling, and we'll see what we got. This is Bitcoin. Traded all the way back down to the lower, higher time frame box, smaller time frame box. We're inside. We hit the top of it, hit the bottom of it. Now we're working our way back up again in the consolidation. You can see how it's compressing here, getting smaller and smaller until it has to bust out of here. So this little area up here above 50% of this small range. Then mean threshold. Yeah, I got nothing really for you in Bitcoin. I like that we're reacting off this. If we can come back down into this range and get through this these little imbalances here and use them for support to come lower inside this range, your box would be around here to aim for. If you go through that, then we're looking for this relatively close below us. UNG, good. Greg's getting a bit of a run today. Good for you. I like it. I like to hear that, buddy. We return back up into here. That's good. I like to see that keep pushing higher. We're talking about getting on top of this now. I like that. Wheat, still working in this order block here now. Come all the way back up into that candles open. So 5800. Mean threshold, consequent encroachment of that wick would be perfect. Peel off of that, start coming back down again, run these lows, aim for the box below us. We've come back up into that level that we're looking for in sugar. Excellent. I want to see that stay open now and start rolling back down. It'd be nice to see this. It'd be more positive for a negative. It would be more positive for a short, let me put it that way. If this little piece on the top here stays open and this reaction here now continues going down, leaving that last little piece open. Again, we're still looking for this leg to finish. Back to our cattle are getting antsy. They're making little runs now on liquidity below the market. I want to see it run above, come back, look at distinctive pop above here now, come back inside that level and then really start gunning it higher. Cocoa, we're still looking for our downside objective here. Equal those first. For next, that was our level that we're looking for this morning, and we've hit it already. So now if we start drilling through this level, come back, find some support at it. I'm looking for these equal lows next. So we've met our objective there. Slumber lumber, and we're still pushing higher up with our piggies, which is what we're looking for. Excellent. So far, they're all working out the way we wanted them to, and That's the level we're looking for to find support at. Traded above it, came back inside a little bit deeper than we would have thought. I wanted to see it just come back to these old high or these opens here, and it just dropped below them, which is fine. I'm okay with that. And now we're extended. So gold, we called gold as well today. It's lovely. And we called oil. Move. Look at that move. Lovely, lovely, lovely oil. We're looking for this candle here this morning. We traded back above it. We traded all the way back inside it. Dipped into the mean threshold of this candle. And then you're looking for higher time frame reversal, or looking for the reverse now here. Let me see what we're looking for here. You trade back into the reversal on the hourly. On the hourly here, this is the one you want to see get support and just leave, not tag all the way back into here. It did. Still valid. Long. Looking at 3 o'clock in the morning. Look for a return back into an old high once that's broken. Breaks that high, comes back. Look at that. Perfect. Hits it. And you've got a $1.80, $1.44 run right now in oil. And that's huge. And I hope, Craig, I hope you caught that, buddy. 71 degrees and sunny in South Carolina today. Nice. Do have room to add copper to your commodity sheet. Ooh, I used to have all the steel, all the precious metals. Used to do palladium and all that stuff. I had a whole stack of them. We can throw those in here, where we can throw them in. Let's throw them in under the power grid, because nobody gives a shit about the power grid. Let's do copper. Copper futures. Let's do copper futures. And let's do the contracts. October. No, let's just do copper futures. There you go. We'll do copper futures for you. Nice little return back into discount array. Run above, find support inside here now, and start pushing higher. We're in a consolidation right now. I want to see this get above that high to start pushing back up into that range. I like the fact that we had a common gap here that was filled, and now we're looking for a continuation. I want to see copper kind of run out of there, though. See what I mean by internal range liquidity? If you're looking at all this range here, look at this. This is the magic box I would be drawing on this area. Let me get this under control here. Magic box would be like this. That's where I would have, if you're coming down here and you broke that low, I'd be like, we're gunning for magic box down here. Come back, find support at the box, extend the box. See that? So now you want to see this provide support and start climbing up above here, and then get a displacement candle. Use this consolidation for displacement higher, and then you're looking for upside box, which is from here to here. It's quite big. Yeah, that's gold. Or sorry, that's copper. Other than that, like we'll go through here. We've done gold. We're still waiting for this to get its legs out of here, and 70%. You'd be out right there now. Move to the sidelines. You made yourself, I think we called this one out of here. I return back into this order block. So 52.64 to 45. There's a $7 drop. That's a 10%, almost 12% return on your money just in that call we gave you yesterday on Wayfair, or a couple of days ago on Wayfair. Last week, actually, I think I called that on Friday. That's a 12% return on your money just in Wayfair if you're shorting that. And we call it Disney longer. So we've got 93. There's a $4 run on Disney so far. Has anybody else got one more stock for me to look at before I go? I'll put it up in here. I'll give somebody else an opportunity. If there's a specific stock you're interested in me looking at real quick, then let me know and I'll have a quick analysis on it. I'll give you a couple of minutes for that. Mark, which stock covers the housing market? No idea. If you know the name of it, let me know and I'll put it in here. Housing market. Well, I have one in a stock market, which is in a REIT. It's a it covers this is the one I'm in right here, AGNC. It covers it's a REIT. It covers government-backed mortgages. It's a guaranteed retail mortgages, and they pay a dividend of 12 cents. Right now on a $10, that's 12% per year is the dividend they pay. So all you Americans, even down here, this is a nice discount range. If you look at the overall range of this stock, it's quite huge. Oops. On a weekly chart, here at a discount. And a weekly chart, we've got breaker. It takes out these lows. We've now traded above the breaker, and now we're trading back to the breaker right here. So I'm expecting this candle to support price and this thing to start taking off. So that's the what I'm looking for in AGNC. It's a guaranteed investment or guaranteed security against retail, no commercial mortgages. So it's government-backed safety on mortgages, American one. So anyway, that's where I'm looking at off of here to go a little higher. If you're looking at the swing point, here's the swing right there. See how the body traded above it? You come back. These are two down closed candles. If you missed it right there on that return, then look for that order block to get taken to the upside. You wait. Boof, we have a displacement candle, finally closes above it, comes back inside it right here. And then finally trades up, comes back one more time, hits it. Now you're looking for that to start turning around and going higher. If we take out this candle here lower, then we're coming back into the range and looking for this down here. And I don't want to see that, obviously. That's where you're looking at for that particular stock. I like it because it pays dividends. Pays 12%. That's more than the bank will pay you on your money. And it's just demo money. Not that I'm giving any financial advice, because I'm not recommending anything. I'm just saying. Mark says XLRE. XLRE. I'm just looking, not giving advice, just looking. Real estate. Oof, look at that. Oof, returns right into it. Smash, and then starts to leave. Takes out old highs. Breaker. Literally opens. Look at this open. Watch right here, open. At 39.64, 39, what is that? Opens at 39.26. Its low is 39.22. What's the high of this candle? 39.21. 1 penny short of hitting that before the takeoff. Gapped up. That's what you look for. Return back into this to go higher. Once it breaks that high, you go, good. If it comes back into it, and if it literally opened up higher and came back 1 penny within striking distance, if you had that sitting right on there, you would have been so frustrated watching that thing take off, and you were literally within 1 penny of getting your trade tripped. But anyway, that's kind of interesting. So if you miss that one, wait for that one. If you miss that one, wait for this one. See how this one here, body trades above it right there, trades back into it right there, right onto the open, or the close I should say, and then starts to run up, comes back, gives you another little kiss, and then takes you off to the prom. So if you didn't catch it there, you would have caught it there. Looking for a reversal here, you see it right here, trades back inside it right here, you go short inside this range, pay yourself on the way down, it takes out the low, welcome, reversal, trades above it. Do you get an opportunity to get in on it? No, wait for the next one. Here's the next one, trade above it. Do you get an opportunity to get in on it? Nope. Now all of a sudden you're in this range, you're above 50%, wait for the high to get taken and then trade off that order block. If not, you're buying a premium that may come back to a discount later. Look at the range you're in. So every time you get higher and higher, you do not want to buy above 50% of that small range. So wait. It doesn't take out the high. It sits right on it. Trades all the way back down. Now gives you your entrance for a long. So this could trade all the way back down into here. There's a little imbalance down here. Stop would have to be sitting right here to run back up, take out these equal highs and go higher. That's what I'm looking at. Not suggesting you buy or sell that. That's just a little analysis I can see inside that range. Thanks for another great day, Darren. I'm off now. Okay, Hans, take care, my friend. So that's real estate that I can see. So watch this. This could be a smart money reversal, low risk sell. Smart money reversal, low risk sell. Accumulation, distribution. If we drop below here, accumulation, as soon as we get back into this candle for a second level of distribution, we could be seeing a big crash. It's not necessarily a crash. You could see a drop in this real estate. But right now I see a bullish tendency. I don't see you're back up into this one here for a short. You've got to get below here now. It's got to go here. If you want to go bearish, it's got to get below here. Otherwise, it's still bullish inside this. You want to get above here now for extra bullishness. If you want to wait for it to get out of here, wait for it to get above that little imbalance right there, and then go higher. If you want to get in on it over here, and then if it does, and real estate takes off again, you could have a tiger by the tail here. It could be running up into the 50, 60 bucks range as a long-term projection. Anyway, that's it for me. It's 11:30. I've been here for 4.5 hours. Thanks everybody for coming. Thank you all you new subscribers. Thank you for tuning in. Thank you for the thumbs up. I appreciate it. I'm here to help you guys out as much as I can. I'm doing it for free. So don't troll me. All I'm trying to do is my best to help everybody out. It's free because, hey, if it makes me money and it makes you money, then I'm happy for you. Then we've done it. We've done our job here. So I wish you guys all the best, and I will see you tomorrow morning, bright and early at maybe sometimes I get a little excited and I want to be in before 7 o'clock my time, which is just before 9 o'clock New York time. So until then, I will see you guys tomorrow. All the best. Take care.